Hello, guys. Welcome back. After a long time, I'm sharing this video. Wait, it's too noisy. I think it's better now. Okay, இன்னைக்கு நம்ம என்ன பார்க்க போகிறோம் அப்படின்னா we are going to discuss CBSE board exam question paper. என்கிட்ட இருக்கிறது வந்து 2025 board exam question paper set 3. Okay, if you guys have set 1 set 2 probably question number தான் மாறி இருக்கும். So you just check the question number alone. Okay, jumble தான் இருக்கும். So without wasting time, let's jump into the solution. First question: D, E and F were partners in a firm sharing profits and losses in the ratio of 2:3:5. This is the old ratio. G was admitted as a new partner for 1/5 share in the profits of the firm. G acquired his share entirely from F. So which means what? This sentence mean G acquired his share wholly from F. So these two people did not sacrifice anything. So this is G's share, which you have to subtract it from F's old share in order to calculate F's new share. So D and E அப்படியே விட்டுடுங்க, அவனோட ஷேர் நம்ம ஒன்றும் தொட தேவையில்லை. So certain MCQs we need to do certain calculations, அதை நான் இங்கே போடுறேன். Okay, so first one we have to calculate new ratio. So since sacrifice is given, when sacrifice is given, to calculate new share is equal to old share minus subtract what they sacrificed. Okay, let's calculate it. For D and E it is nothing. D or old share is, it is 2:3:5, which means total 10. So 2/10. Wait a minute. Two by 10. He did not sacrifice anything, so he will have this 2/10 as it is. Then E 3/10. He also did not sacrifice anything, so he will also have the same share. Whereas F oda share on the 5/10. What he sacrificed is G's share, that is 1/5. So let's take LCM. LCM is 10. So which means this 1/5 alone you have to convert it to 10. In order to convert, multiply 2/2, that is 5/10 minus 2/10. 5 minus 2/10, that is 3/10. That is F's new share. Okay, and at last you write the new partner G 1/5. Since everybody's denominator is 10, convert his share also into 10 or 2/10. So new ratio is equal to 2:3:2. 2:3:3:2. Okay, I think this line is too big. அதனால தான் கொஞ்சம் லைனில் நான் எழுத மாட்டேங்கிறேன். I'll try to write it on the line. Video clarity இருக்கா? I hope it is clear. some warning வருது. Stream current bit rate is 3485. இது வேறு பார்க்கணுமா, மாற்ற முடியுமான்னு தெரியல. 6800 மாற்ற சொல்கிறானுங்க. Okay. Okay, so the answer is 2332. This is the answer. Okay. Then second question. Sharma, Verma and Khan were partners in a firm sharing profits and losses in the ratio of 2:1. The firm closes its books on 31st March every year. On 31st December 2024, Khan died. So which means exactly 9 months he stayed in the firm. Jan, Feb, March alone he was not there. So 9 months he was there in the firm. Khan's share in the profits of the firm till the date of his death was to be calculated on the basis of the profits of the previous year. Previous 1 year oda profit base பண்ணி calculate பண்ணணும். Okay. During the year ended 31st March 2024, the firm earned a profit. This is last year. Okay, previous year oda profit வந்து 6 lakh. So we have to calculate his share of profit based on previous year profit only they mentioned. So this is the previous year profit. The treatment for Khan's share in the profit of the firm till the date of his death. Okay, let's first calculate value. They are asking, I think, journal entry also. Journal entry, hope you all remember it. It is P&L, profit and loss suspense account, debited to the deceased, that is Khan's capital account. So if you see here B and D alone, P&L suspense account is debited, Khan's capital account is credited. Okay, so that means either it is B or D. Value 6 lakh. Okay, inge calculate பண்ணவா. 6 lakhல அவனோட ஷேர் எவ்வளோ, 1/5 into 9/12. So which means that is by 2, the 5 into 10 அப்போ இந்த ஒரு 0 போய்டும், which means 10,000 into 9, 90,000. So answer is B. P&L suspense account debited by 90 and Khan's capital account credited by 90,000. இதென்ன வார்னிங் வந்துட்டே இருக்கு. The stream current bit rate is 2838. What is this warning? I don't know. Lower than the recommended bit rate. We recommend you to use a stream bit rate of 6800. 6800 தான் வச்சிருக்கேன். Okay, we'll ignore that error. Okay, let's go on to the third question. Uma and Veena were partners in a firm sharing profits and losses in the ratio of 4:5. On 1st April 2024, they decided to admit Usha as a new partner for 1/4 share in the profits of the firm. On Usha's admission, it was decided that the goodwill of the firm will be valued equal to the previous year's profit. So goodwill of the firm last year oda profit dana, last year oda profit is equal to goodwill of the entire firm. The profit of the year ended 31st March 2024. This is the previous year profit, 5,76,000. However, to arrive at this profit, both the opening stock and closing stock were valued by 50,000. Sorry, overvalued by 50,000. Okay, there is an error in this profit, so we need to adjust. To rectify this error, you need to understand opening stock and closing stock. Hope you remember this. I think question number 3. Yeah. Hope you remember trading account. wherein the trading account opening stock appears in the debit side, whereas closing stock appear in the credit side. So which means opening stock is an item that appear on the expense side of the trading account. Closing stock is an item that appear in the income side, revenue side of the trading account. So closing stock is added to the sales. So anything, if you overvaluate this, profit will increase. If you undervaluate this, profit will decrease, because it is a positive value to the profit. If you write more closing stock, profit will be more. If you write lesser value of closing stock, the profit will be lesser, because it is something that is positive to the revenue. This is something negative to the revenue. So if you overvaluate it, profit will reduce. If you undervaluate it, profit will increase, because it is a negative value to the profit. Overvaluation means what? You are writing more opening stock than the actual value. So அப்போ என்ன ஆகும்? profit அதிகமாக subtract ஆகும். So it will be less profit. Undervaluation means what? You have wrote lesser value than the actual value. So that means you subtracted a lesser value. So which means profit will be more. So this is the concept. Now what we need, this is, you see this, because of overvaluation of opening stock, profit will reduce. Because of overvaluation of closing stock, profit will increase. Since both the stocks are overvalued by 50,000, the net effect of the profit is nil. It is like a compensating error. Because of overvaluating opening stock, profit reduced by 50,000. This one. Because of overvaluation of closing stock, profit increased by 50,000. So first error reduced profit by 50,000. Second error increased the profit by 50,000. So what we have to do? So do nothing, because both the errors have been compensated. So you just ignore this one. Okay. So goodwill of the firm will be 5,76,000. Okay. Since this 50,000 has nothing to do with the profit, that is, they are compensating error, they both neutralized, one error neutralized the other error. So the net effect in the profit is 0. So the profit is 5,76,000, which is equal to the firm's goodwill. And what they have asked, the goodwill of the firm will be exactly that profit, 5,76,000. Then the fourth question. வார்னிங் வந்துக்கிட்டே இருக்குது. இது ஸ்ட்ரீம் வார்னிங், என்ன வார்னிங்னே தெரியல. ஸ்ட்ரீம் கரண்ட் பிட் ரேட் 1000 இஸ் லோவர் தேன் த, ஐ திங்க் அதனால் ஏதாச்சும் கிளாரிட்டியில் ப்ராப்ளம் இருக்கான்னு அதுவும் இல்லை. எதுக்கு இந்த வார்னிங் வந்துகிட்டே இருக்குன்னு தெரியல. So okay. Fourth question. Debentures which can be transferred by the way of delivery and the company does not keep any record of the debenture holders are called bearer debentures. See, bearer debentures அப்படின்னா யார் அதை பேர் பண்ணுறாங்களோ, யார் அதை வச்சுருக்காங்களோ அவங்களுக்கு தான் அது சொந்தம். The one who have that debentures ultimately keep the title. So whoever is having that debenture, they can claim the title. So that is what that means. Debenture which can be transferred by the way of delivery. Simply by delivering it from one person to another person, the titleship transfer. So you don't need to change the name of the ownership. And the company does not keep any record, because there is no record who is the owner. So whoever is having the debenture, and they are the owners of the debentures, holders of the debenture. So it is a bearer debenture. Hope that is clear. If there is any confusion or anything that you need better understanding, please let me know in the comments. I will explain you. Don't worry. In the event of dissolution of a partnership firm, The order of payment of losses including deficiencies of the capital shall be. Okay, so they are asking you the procedure of settlement. Okay, in what way, in what order you will settle the partners. Okay, what is it? First out of profit. The order of payment of losses including deficiencies of the capital shall be. Option A, first out of profits. Next, by partners individually in their profit sharing ratio. Lastly, if necessary, out of capital. The end of should come, the order of payment. Sorry guys, some problem with that bit rate. It is not allowing me to stream. It is getting disconnected. Some warning வந்துகிட்டே இருக்கு. Okay, now it is showing the stream is healthy. Okay, fine. In the event of dissolution of a partnership firm, the order of payment of losses including deficiencies of the capital. Okay, generally ஒரு ஆர்டர் அப்படின்னு இப்போ லாஸ் இருக்குது அப்படின்னா ஃபஸ்ட்டு ஃபர்மில் ஆல்ரெடி அக்யூமுலேட்டட் ப்ராஃபிட்ஸ் அப்படின்னு இருக்கும்ல, அந்த ப்ராஃபிட் வச்சு தான் நம்ம பே பண்ணணும். ஓகே, ப்ராஃபிட்ஸ் ரிசர்வ்ஸ். ஓகே, ஃபர்ஸ்ட் அவுட் ஆஃப் ப்ராஃபிட். ஸோ ஃபஸ்ட் அவுட் ஆஃப் ப்ராஃபிட் அப்படின்னா இங்கே ஆப்ஷன் ஏ அண்ட் டி மட்டும்தான் அது இருக்குது. ஸோ மித்தது எல்லாமே வேறு. ஃபர்ஸ்ட் அவுட் ஆஃப் கேபிட்டல், ஃபர்ஸ்ட் அவுட் ஆஃப் பார்ட்னர், நோ. ஸோ எதர் இட் இஸ் ஆப்ஷன் ஏ ஆர் டி. செகண்ட் ஒன், நெக்ஸ்ட்டு இப்போ ப்ராஃபிட்டும் பத்தலை அப்படின்னா if profit is not sufficient, then the partners have to bear that loss individually. Okay, so next is by the partners individually. Okay, then option A is obviously the correct answer. Next, by the partners individually in their profit sharing ratio. So remaining loss the partners have to bear it. Okay, lastly, if necessary, out of the capital of the partner. Suppose even if that is not sufficient to pay any liabilities, you know, partners liability is unlimited, which means they may have to bring additional capital in order to settle the liabilities. So it is option A. Okay, then next one, sixth one. Mohan, a partner, withdrew 80,000 from the business for his personal use during the year ended 31st March 2024. Interest on drawings was to be charged at 12% per annum. Interest on Mohan drawings will be. Okay, so he withdrew 80,000 from the business. Only it is given during the year, only it is given. There is no information what is the date of the drawings. So when the date of drawings is not there, then we have to go and see whether the percentage has per annum. It has per annum. So if per annum is there and date of drawings is not given, then on an average of 6 months drawings interest we have to charge on the partner's drawing. So which means, let me calculate here, it is 80,000 into 12 by 100 into 6 by 12. So 12 will get cancelled, 2 zeros will get cancelled. So 48,400. So 4,800 is the answer. Then the next one is, the following account is debited for allowing interest on partner's capital. So you know, journal entry for allowing interest. Okay, they are not saying transferring interest, allowing interest. So it is interest on capital account debited to partner's capital or current account. So it is interest on capital account, option C. Then seventh one, Manas Limited forfeited 600 shares of 10 rupees for the non-payment of first call 2 per share. The final call 3 was not yet called on. So which means, so it is 10, of which 3 rupee is not called, 2 rupees is not paid, so which means remaining is 5 rupees is paid. That's how you have to split up. Okay, 3 rupees is not paid, balance 7 la 2 rupees first call not received, 5 rupees is received. In the journal entry for the forfeiture of the shares forfeited account will be, we know shares forfeited account we will credit, so you can eliminate this two. It's not debited, it is credited. By what amount you will credit? By the face value of the shares received. So face value of the share received is 5 rupees. 600 shares into 5, so which means 3000. So it is credited by 3000. So answer D. Then our question, Rajesh Limited forfeited 300 equity shares of 100 each, 70 called up. So they have here very clearly given how much is called, 70 called up. There we found out it was 7 called by the final amount not called. Here it is directly they have given 70 called. For the non-payment of first call 20 per share. So here total amount called itself is 70. In that 20 is not received. Out of that means 50 is received. Out of these shares, 100 shares were reissued. So it's a partial reissue. Only 100 shares we are reissuing out of the 300 shares of forfeiture at 100 per share. Okay, this is reissue value. 70 paid up. This is the value that we mentioned in the share certificate. That means 30 rupees premium. So we are reissuing 100 shares as 70 paid up, as if the shares have been paid 70 rupees, but at 100 rupees we are reissuing. So which means they have to pay 100 rupees. So at a premium of 30 rupees. How much balance will remain in the share forfeiture account? So you know that after reissue, if it is fully reissued appadina, there won't be any balance in the share forfeiture account. So for example, take this sum. This sum we have 3000 rupees. Sorry, previous question we have share forfeiture account 3000. So this 3000 can be utilized towards discount on reissue of that particular forfeited shares. Okay, after discount, if there is anything excess over discount, that you can transfer it to capital reserve. Okay, if any share not reissued, so if it is reissued, either we will use it for discount or we will transfer remaining balance to the capital reserve. So reissued share or balance will completely get out of that share forfeiture account. What remains in the share forfeiture account, what they are asking, balance in that remain in the share forfeiture account is the amount of share forfeiture account credited for not reissued share. So how many shares not reissued? 200 shares. The total 300 shares forfeited. In that 300 into 50 credited. 300 into 50 credited means it is 15,000 credited to share forfeiture account, but that won't be the balance in the share forfeiture account, because in that 100 shares money, that is 100 into 50, 5,000 we transferred to capital reserve because there is no discount in this sum. So balance is 10,000. Or else you can also calculate like this. Then the shares that were not reissued is 200, or share would gain 50, so total 10,000. So you can also calculate like this. So option A is the answer. Sorry, I was checking the live. Okay, let's go to the 8th question. A portion of uncalled capital reserved by a company to be called only in the event of winding up of the company is called reserve capital. So reserve capital means exactly the meaning of the question. Then next question, that is if you want me to explain, I'll explain. That is reserve capital means what? See, out of that some portion of the face value of the share, company doesn't call it immediately. The company by a special resolution passed in an exclusive meeting conducted for this, they will convert this uncalled capital into a reserve capital, which will be called only at the time of winding up of the company. So that is what called reserve capital. So it is option C. The next question, when applications for more shares of a company are received than the number of shares offered to the public for subscription, it is known as oversubscription. So this is and all easy question, you know. Then question number 9. Sorry. Ravi, Mohan and Vinod were partners in a firm sharing profits and losses in the ratio of 2 to 1. The partnership deed provided that யாரு 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 கதெல்லாம் திறக்க முடியாது போங்கடா. சாரிப்பா, வீட்டில் டிஸ்டர்பன்ஸ். ஓகே, sorry 2:2:1. The partnership deed provided that interest on partners' drawings will be charged at 12% per annum. Starting from 1st July 2023, Mohan withdrew 20,000 every month for his personal use for the year ended 30 starting from 1st July. So he did not withdraw entire year. So which means July 1 to March. Okay, July to March. So April, May, June he did not withdraw. So 3 months he did not withdraw. So remaining 9 months he withdrew. So if we know the formula to calculate interest on drawings. யாருடா கிளாஸ் எடுத்துட்டு இருக்கிறேன், டீ கொண்டு வா. லெட் மீ கெட் a tea for me. டீ ரெடியாக இருக்கு எனக்கு, ஒரே சொல்கிறேன். டீ கொண்டு வா, நான் லைவ்ல இருக்கேன். கிளாஸ் எடுத்துட்டு இருக்கேன். Sorry. Yeah. So what is the formula to calculate interest on drawings under this average period method? This is average period method. If you have not watched the video for average period method, it is there in the videos. You can also watch if you want to know how to calculate average period basis. So this is take total drawings into percentage, that is rate of drawing interest on drawings, into average period by 12. So how to calculate average period? First drawings months accrued till the end of the year, and the last drawings months accrued. That is what we want. First drawings is 1st July. Last drawings is 1st March. Okay, so from July to March 31st, so compare with this book's closing date, which is exactly 9 months. March 1 to March 31st, 1 month. So average period is 9 plus 1 by 2, that is 5. So 10 by 2, 5 months is the average period. So thus let's apply this. Total drawings is he withdrew 20,000 every month. 20,000 into 9, because 9 months only he withdrew. Rate of interest is 12%, 12 by 100 into average period is, just now we calculated, 5. So it is 5 by 12. So this 12, this 12, this 2 zeros, this 2 zeros. What remains is 20 into 500, 100 into 9, 900. Oh, okay, they are asking only months, so which means answer is very clear. I thought they are asking interest on drawings. I didn't see the options, and also didn't read the question fully. So it is 5 months. Sona, Mona, and Raghav were partners in a firm, sharing profits and losses in the ratio of 4:3:2. Raghav retired. The balance in the Raghav's capital account after making the necessary adjustments on account of reserves and the revaluation of assets and liabilities was 2 lakh 20. Sona and Mona agreed to pay him 4 lakh in full settlement of his claim. Raghav share of goodwill in the firm. Okay, this is hidden goodwill sum. Okay, for hidden goodwill at the time of retirement, the formula is retiring partner share of goodwill. That retiring partner or outgoing partner share of goodwill is equal to agreed amount of settlement minus his adjusted capital. See, what is the agreed amount of settlement, which is 4 lakh. What is this adjusted capital balance? 2 lakh 20. So 4 lakh minus 2 lakh 20 is 1 lakh 80. That is the Raghav share of, that is retiring partner share of the goodwill. So answer is B, 1 lakh 80,000. Next question. Giri and Shyam were partners in a firm sharing profits and losses in the ratio of 3:2. Their capitals were 1 lakh 60 and 1 lakh respectively. Hema was admitted for 1/5 share in the profits of the firm. Hema brought 1 lakh 50 as her capital. The goodwill of the firm on Hema's admission. So they are asking you to calculate hidden goodwill, because there is no information regarding premium for goodwill. Suppose if premium is given, then we will be able to calculate goodwill based on the premium. Since premium is also not given, so hidden goodwill. Admission la hidden goodwill and the firm oda goodwill, not new partner oda goodwill. It is firm's goodwill, hidden. Formula is capitalized value of the firm minus adjusted capital of all the partners, including new partner. So how to calculate capitalized value of the firm? New partners capital into reciprocal of his share. So new partner ode capital evlo? It was given 1 lakh 50. Avanoda share 1/5, reciprocal 5/1. So CVF is equal to 1 lakh 50 into 5/1, that is 5. So which means it is 7 lakh 50. So now goodwill is equal to capitalized value 7 lakh 50 minus adjusted capital of all the partners. Add 1 lakh 60 plus 1 lakh 2 lakh 60 plus 1 lakh 50, 4 lakh 10, 2 lakh 60, 3 lakh 60, 4 lakh 10. So 7 lakh 50 minus 4 lakh 10 is equal to 3 lakh 40. So answer is C. Hope I'm not going fast, since it is live. I don't want to make it very lengthy video. Suppose if I am going fast or you are not understanding anything, please let me know that in the comment section, so that I can help you for you to understand it better in a different manner. Okay, 11th one. Java Limited forfeited 600 equity shares of 100 each. 80 only called upon for the non-payment of first call of 20 per share. That means out of 80 rupees, 20 is not paid by the shareholder. That means 60 rupees is paid. I'll write like this: 80 la 20 not received. That means remaining 60 is received. These shares were reissued at 90 per share, fully paid upon. So that means the share certificate is issued to the shareholder as if that he paid full amount, but he is going to pay only 90 rupees. So 10 rupees is the discount that we are allowing at the time of reissue. The amount transferred to cap. So since it is entire reissue, full reissue, you can directly subtract amount credited to share forfeiture account minus discount. How much amount credited? 600 shares into amount received 60. So 36,000 is what credited to share forfeiture account, less discount. How much is discount? All the 600 shares reissued at a discount of 10 rupees. So 6,000 is the discount. So what is the excess gain on this reissue? 30,000, which would have been transferred to capital reserve. So answer is B. Ashok and Avinash were partners in a firm sharing profits and losses in the ratio of 3:2. On 1st April 2023, their capitals were 10 lakh, 15 lakh respectively. After the accounts for the year ending 31st March 2024 were prepared, it was discovered that interest on capital at the rate of 10% per annum as provided in the partnership deed was not credited to the partners. Past adjustment. Okay, they forgot to give interest to the partners before the distribution of profit. Had the interest on capital been duly provided, the firm's divisible profit would have. Okay, they are not asking you to adjust this error. Just they are asking if the interest on capital has been provided now, how much would be the divisible profit. Okay, see, actually where is the profit? Okay, their profit is not given, so that is not the thing that we needed for this question. So if this interest was calculated, see, this opening capital only given about calculation of interest on capital. 10% on 10 lakh is 1 lakh, 10% on 15 lakh is 1 lakh 50. So total is 2 lakh 50. So profit would be reduced by 2 lakh 50. Okay, I hope it is clear. No change in the profit, reduced by 25, increased by 2 lakh. So no, option A is the correct one. So interest is 2 lakh 50. So the firm's profit would have been reduced by 2 lakh 50. The next one, Daman, Mohit and Paras were partners in a firm sharing profits and losses in the ratio of 4:3:2. Daman retires. Mohit and Paras decided to share future profits and losses in the ratio of 5:3. The gaining ratio of Mohit and Paras will be. So in order to calculate gaining ratio, formula is new share minus old share. So for that is these two people, Mohit. For Mohit, new share is 5/8 minus old share is 3 by total 9. Right? 7 plus 2, 9. Yeah. So cross multiply 9 72, that is this 2, then this 2. 45 minus 124 minus பண்ண எவ்வளோ வருது 21 by 72. Then Mohit, this is for Mohit's gain. Okay, then Paras gain is new share is 3/8 minus old share is 2 by 9. Again 72, 27 minus 24, that is 3 by 72. This is Paras gain. So that means 21:3 is the answer. Oh, sorry, I made a small mistake here. 8 2s are 16, 24 tapa potta. So which means over there 11, yeah, sorry guys. So 21:11. Shyamla Limited purchased machinery of 9,50,000 from Rohini Limited. The payment was made by issue of 9% debentures of 100 each at a discount of 5%, redeemable at a premium of 10% after 4 years. The number of debentures issued in favor of Rohini Limited will be, to calculate number of debentures, the formula is net purchase consideration divided by issue price. So ignore the redemption price. So this premium and redemption is something that we don't need to calculate number of debentures. It's an unnecessary information. So that is number of debentures is equal to purchase consideration, net purchase consideration divided by issue price. Okay, what is the purchase consideration? 9,50,000. There is no other payment, only they are going to settle this purchase consideration by the issue of debenture only. So entire purchase consideration you have to take 9,50,000 divided by issue price. Issue price means after deducting discount, after adding premium. So in this case we have discount of 5% on 100 rupees, 5 rupees, 100 minus 5, 95. So which means 10,000 debentures we are going to issue it to the Rohini Limited. Manav, Mayank and Manish were partners in a firm sharing profits and losses in the ratio of 5:3:2. On 31st March 2024, their balance sheet showed a debit balance of 60,000 in the profit and loss account. They decided that from 1st April 2024, they will share profits and losses 2:2:1. Okay, change in profit sharing ratio, 3rd chapter. The journal entry for writing off of debit balance in the profit and loss account, and without even saying the options, we can say journal entry for this is old partners that is partners capital to P&L account, and that 60,000 has to be divided in the old ratio. Okay, that is Manav, Mayank and Manish capital account individually debit to P&L account. 60,000 if you have to divide this one, so total share 10 dividing it by 10, one share is 6,000. 5 6 are 30,000, 18,000, 12,000. 30, 18, 12. So it is obviously option A. Okay, hope that is clear. Then B. Murthy, Madhavan were partners in a firm sharing profits and losses in the ratio of 3:1. They admit Srinivas as a new partner in the firm. On the admission of Srinivas, there existed a balance of 8 lakh in debtors account and a balance of 50,000 in the provision for doubtful debts account. Debtors of 60,000 proved bad, hence were written off. It was decided to maintain a provision for doubtful debts at 10% of the debtors. The revaluation account will be debited by, okay, you see this, the bad debts 60,000 proved bad, which means it is bad debt. This bad debt will be transferred to the existing provision, which is only 50,000. So which means the revaluation account has to bear this 10,000, the excess bad debt. Okay, why do we create provision for bad debts? In case if there is any bad debts happening in the future, this provision we will be using it. Since the provision is less than the bad debt, that excess bad debt at the time of any reconstitution of the firm, will go to revaluation account. So revaluation account will be debited by 10,000 for the bad debt, and then again they want to maintain a new provision, 10% of the debtor. Now debtor value is not 80 lakh, 80 lakh கிடையாது, ஏன்னா 60,000 is proved bad la, so we would have written off 60,000. So new debtor value 7 lakh 40 தான், அதில் 10% 74,000. So this is the new provision that we want to create. To create provision is a liability, increase in liability also debited to revaluation account, it's a loss. So both of this is debited to revaluation account, so total 84. Okay, so by these transactions 84,000 is debited to revaluation account. Then the last question, that is MCQ la last question. There are two statements, assertions and assertion ratio. Now what is the assertion? That statement: partnership is the result of an agreement between two or more persons to do business and share profits and losses. Yes, the assertion is true. Okay, partnership agreement should always be in written form, but the reason is false. It can be even in oral form also, it need not to be in written form. So assertion is correct, but the reason is incorrect. So option C. Nadachi. Okay, so with this MCQs are over. Now let's move on to 3 mark question. One by one we will discuss in detail. Suppose if you want, now it is live, after the live is over, the video will be there. So if you want to jump to any particular question that you want to see, means you can navigate the timeline. I will give it in the description. Okay, let's first take this first question. Sudha, Sudhir were partners in a firm sharing profits and losses in the ratio of 4:1. On 1st April 2023, their fixed capitals were 12 lakh and 4 lakh respectively. On 1st July 2023, Sudha invested 2 lakh as additional capital. On 1st August 2023, Sudhir withdrew 50,000 from his capital. The partnership did provided for the following: interest on capital 6%, interest on drawings 8%. Okay, but this withdrawal is not drawings. Okay, there are two types of drawings. One is withdrawal of capital, drawings against capital, that is not normal drawings. Another one is normal drawings, drawings against profit. So for drawings against profit, normal drawing ku da indha idu. So this is directly deducted from the capital whenever that particular partner withdraws. During the year, Sudha withdrew for 60,000 and Sudhir withdrew 40. This is the normal drawings. In the drawing ku da in the 8% for personal use. After providing interest on capital and charging interest on drawing, the net profit of the firm for the year ended 31st March, prepare current account of, okay, this is divisible profit then. Okay, so they have provided interest on capital, also they have charged interest on drawings. That means after these two, this is the only two items that appear in the appropriation account for this particular question. Now this is the profit, which means this is the divisible profit. Okay, this you have to divide it in the ratio 4:1. Prepare current account of Sudhir, Sudha and Sudhir. Okay, there is no current account balance given, so we no need to write any balance brought down. Okay, ரப் பண்ண முடியல. ஓகே, டைப் ஆயிருக்கு. ஃபைன். ஸோ பார்ட்னர்ஸ் எழுதுங்கடா, எழுத மாட்டேங்குது. partners current account. Okay. Okay, I just ignore this heading, that is particular. Okay, I write name alone, Sudha Sudhir. So in order to do it fast, I will write little bit informally. என்னடாச்சு? I don't know, something misbehaving, so ignore that. Okay, we don't have any balance brought down, so we have to start with the interest on capital and interest on drawings. Okay, we did not calculate it, so let's first calculate interest on capital. Capital given is opening capital only. Okay, so we no need to do any. Okay, we have some additional capital, withdrawal of capital. So Sudha is having additional capital. Please use a keyframe frequency of 4 seconds or less. Currently frames are not being sent often enough, which can cause buffering. Current free frequency 5.1 seconds. Note that ingestion errors can cause incorrect group of picture size. So ஏதோ எரர் காட்டுது, ஸ்ட்ரீம் ஹெல்த் இஸ் வெரி புவர்னு சொல்லி. It's not running. Sorry, some errors it is showing. I don't know what is happening. Okay, so capitals given here are 12 lakh, 4 lakh, and there are some additional capitals and withdrawal of capitals. For Sudha invested 2 lakh additional on 1st July. So that means from April to 1st July her capital was 12 lakh. Then from July to March her capital became 14 lakh. So we have to calculate like that. Interest on capital for Sudha. So that is from 1st April 2023 to 1st July 7, yeah, 2023 her capital was 12 lakh. Okay, 12 lakh. Then from 1st July 2023 to remaining end of the year 31st March 2024 her capital became 14 lakh. Why this error is coming? இதில் யாருடா கேட்டா உங்களுக்கு? Dismiss error. Okay, so 17 year 2023, yeah. So interest on capital is 6%. So for the 12 lakh, 6% for only 3 months, April, May, June only. July first date itself, capital became 14 lakh. So you cannot include July. So only for 3 months, his capital was 12 lakh. Okay. So which means this 20 will get cancelled, this 12 and this get cancelled, and it will become 1000. So what remains is 18,000, and this one is 6 by 100 into 9 by 12. Okay, these two zeros will get cancelled, this 6 and this 12 divided by 2, the 2 inga adichonna 7000, 7 63,000. That means his total interest on capital is 81,000. இது வேறு கேல்குலேஷன் இவனுங்க வேறு போட்டுக்கிட்டு இருக்கானுங்க. உங்கள்கிட்ட யாரா கேட்ட கேல்குலேஷன்? போங்கடாங்கிட்ட. I hope this is clear. Okay. Yeah. 63 கரெக்டு தானே? டிவைடட் பை 2, 2 0 7 7000 9 63 63,000. So 7381. Let's calculate for now. What's his name? Sudhir. Sorry guys. Yeah. For Sudhir, from 1st April to 1st August, his capital was 4 lakh. From 1st August to the end of the year, his capital became 3 lakh 50 because he withdrew 50,000. Okay, that is what we are going to do. Yeah. So 1/4/2023 and 1/8/2023, his capital was 4 lakh. Then from 1/8/2023 to 31st till end of the year, his capital became 3 lakh 50. So multiply 6 by 100 into April, May, June, July only, not August. August 1 itself, his capital became 3 lakh 50. So it is only April, May, June, July, 4 months. 4 by 12. So these two zeros will get cancelled. Hey, இதல்ட்ட யாரா கால்குலேட் பண்ண சொன்னா? கால்குலேட் பண்ணாதீங்கடா, நானே பண்ணிக்கிறேன். இந்த செட்டிங்ஸில் போய் மாற்றணுமா? மேக்ஸ் ரிசல்ட் சஜஷன்ஸ் ஆஃப், வேண்டாம், நானே போட்டுக்கிறேன். ஸோ பை 2 yes, 4,000 into 2, it is 8,000. Then this one is 3 lakh 50 into 6 by 100 into April to March, remaining, sorry, August to March, 8 months. 8 by, that is August, we have to include August 1 itself, it was changed. August, September, October, November, December, January, February, March. So 8 months. So these two zeros will get cancelled, divided by 2 into 4. So 3,500 into 4. So into 4 means double of double. 3,400 is double 7,000, 7,000 is double 14,000. Okay. Okay, total is 22,000. Yeah. So this is their interest on capital 8122. அது அவங்களுக்கு கிரெடிட் கொடுத்துடலாம். By interest on capital 8 Sudha 81,000, Sudhir 22, I think. 8122. So let's debit interest on drawings to interest on drawings. Also we have to debit their drawings. So let's first calculate interest on drawings. Interest on drawings 8% per annum. Sudha withdrew 60,000 and Sudhir withdrew 40,000. There is no date of drawings given. Just before few questions back in some MCQ I told you, when there is no date of drawings given, then if the rate of interest, that is what happened again, use a keyframe frequency of 4 seconds or less. I don't know. Okay, so per annum is there. So since per annum is there on interest on drawings rate, so on an average of 6 months interest we have to charge. So which means for Sudha it is 60,000 her drawings, in that 8% for only 6 months. So that means by 2 4 0 600 into 4 ஆறுனா 24 2400. And similarly for Sudhir it is, his drawings is 40,000, interest on drawings 8% for only 6 months by 2 4 16 1600. So 2400 1600. ரெண்டாயிரத்தி நானூறு 1600. Yeah. Now also debit their drawings, which is 60/40 to drawings 60,000 40,000. Yeah, at last their profit, there is a profit of I think 3,50,000, right? Yeah, this 3,50,000 divisible profit we have to credit to them in the ratio 4:1. So by P&L appropriation account, because profit comes from appropriation account. So 3,50,000 divided by 5, total share is 5. So dividing it by 5, one share is 70,000. Sudhir is holding only one share, so Sudhir will get 70,000. Sudha is holding 4 shares, so 70 into 4 28, 2,80,000. So total 3,50,000. That's it. Over. Now for both of them debit side is lesser, so go to lesser side and write 2 balance carried down Sudha total 3,61,000 and for him it is 92. So Sudha what the 3,61,000 600 மிச்சம் 1 3 3 plus 8 11 மிச்சம் 1 9 16 மிச்சம் 1 2,80,000 98,600. Yeah, 2,98,600. Then for him it is 92,000 total. 400 0 it is. Okay, 2 and 5 90 92, yeah, 50,400. So this is the current account of the partners. So with this question number 17 over. Now question number 18. Jeevan, Kavi were partners in a firm with capitals of 12 lakh and 15 lakh respectively. Annual okay, audio கேக்குதா? கேக்குது. ஏன்னா ஏதோ எரர் காட்டுது, ஆடியோ கேட்கலன்னா இவ்வளோ நேரம் நடத்துனது வேஸ்ட்டாக போயிடும். Okay. Annual salary of the partners were 2 lakh each. The market rate of interest was 10%. During the previous 3 years, the profits were 8 lakh, 9 lakh and 7 lakh. Goodwill of the firm is to be valued at 2 years purchase of last 3 years average super profit. So we need to calculate super profit method like goodwill. Okay, calculate goodwill of the firm. And you know goodwill of the firm is equal to super profit into number of years of purchase. 2 years of purchase is there. So we need to calculate super profit. To calculate super profit, we need normal average profit after deducting partner salary. Okay. And normal profit, to calculate normal profit, we need the NRR, that is market rate of interest is what NRR here. And capital employed. So capitals have been given, no reserves given, no surplus given. So this is what their capital employed. So with these informations, let's calculate first average profit. Okay, so average profit parangla, we have to subtract partner's salary from all the 3 years profit. That means 2 lakh each. So there are 2 partners, so total partner salary is 4 lakh. So we have to deduct 4 lakh from all the 3 years profit. So that means I'll write, okay, 8 lakh, okay, I'll write it here. Question number 18. Average profit is equal to, it was 8 lakh, 9 lakh, 7 lakh, எல்லாத்துலேயும் 4 lakh 4 lakh subtract பண்ணுங்க. 4 lakh plus 5 lakh plus 3 lakh divided by 3. Okay, am I right? 4, 5, 3 எல்லாத்துலேயும் 4 lakh subtract பண்ணியாச்சு. That is after deducting partner salary only we need to take. Or what you can do is, you can first calculate average profit without deducting partner salary. In that average profit, only 1 year's salary you can subtract. In either way you can calculate average profit. 9 lakh plus 3 lakh, 12 lakh, 12 lakh by 3. So average profit is 4 lakh. Now normal profit க்கு நமக்கு என்ன வேணும்? Capital employed into NRR by 100. So what is the capital employed? Partners capital is what? Capital employed in this case 12 lakh plus 15 lakh, which is 27 lakh. NRR is 10%. That 27 lakh. So normal profit is 2 lakh 70,000. So let's calculate super profit, which is average profit minus normal profit, that is 4 lakh minus 2 lakh 70, that is 1 lakh 30. Okay, so now what is the goodwill of the firm? It is super profit into number of years of purchase, that is 1 lakh 30 into 2, I think, yeah, 2. So it is 2,60,000. So this is the goodwill of the firm. Okay. Then the 19th question, the first one, it's an either or question. Aman, Raj and Suresh were partners in a firm sharing profits and losses in the ratio of 5:3:8. Suresh was guaranteed a minimum profit of 5 lakh per year. Any deficiency on this account was to be borne by Aman and Raj equally. The net profit of the firm for the year ended 31st March 2024 was 8 lakh. So இந்த 8 lakh வந்து இப்போ முதல்ல 3 பேத்துக்கு ரஃபாக பிரிப்போமா? ரஃபாக பிரித்தா எவ்வளோ வருது? That is total share. Here you see. Total share is 8 plus 8, 16. Okay. So that means 8 lakh divided by 16 போட்டால் 1 lakh by 2 வரும். 50,000 ஒரு ஷேர் வரும். So that means 50,000 into 50,000. 50,000 into 5, 2 lakh 50 is share of profit. 50 into 3, 1 lakh 50. 50 into 8, 4 lakh. Okay. Who is that guaranteed partner? Suresh was guaranteed a minimum of 5 lakh, but he is getting only 4 lakh. So there is a deficiency of 1 lakh, which you have to subtract from these two partners equally. 50,000 from him, 50,000 from him. That I will show you directly in the account, because they are asking you to prepare account. Okay. This is 19A. 19 A. So let's first prepare P&L appropriation account. Okay, so by profit and loss account லந்து வந்த net profit எவ்வளோ? It was 8 lakh. So we have to share it to the partners. Capital account and fixed capital இல்லல்ல. Yeah, there is no information. So Aman, Raj, Suresh. So Aman's share of profit was 2,50,000 less his deficiency. The deficiency that he has to bear is 50,000, because total deficiency was 1 lakh. He has to bear half of that, because it was said equally they will bear it. So 2,50,000 minus 50. So Aman's share of profit is 2 lakh. And then what is the next partner? Raja. Raj share of profit was 1,50,000. Subtract his deficiency. He also has to bear 50,000. That means his profit is 1 lakh. And then at last it is Suresh. Suresh's profit was 4 lakh. Add deficiency 1 lakh. So which is 5 lakhs. So total is, that's it. This account is over. The next one, 19 la B. 19 la B என்னது? Sorry, Jay and Vijay were partners in a firm sharing profits and losses in the ratio of 7:3. Their respective fixed capitals were 9 lakh and 7 lakh. The partnership deed provided for interest on capital at 8% per annum. After preparing accounts for the year ended 31st March 2024, it was discovered that interest on capital was allowed 9%, but actually it is 8%. So 1% extra it is credited. So what you can do is 1% you can debit. That is one way of doing it. Another way of doing it, you debit 9 wrong interest, credit correct interest. Okay, so you no need to see whether it is excessively given, credited, or deficitly credited. Okay, so whether we have to credit or debit, that you no need to worry. So there are two method of doing this one. Okay, this wrong one we have to debit because it was wrongly credited. The correct 8% you credit. That is one way. Or else if you are even smarter than this and you want to reduce your workload now, what you can do is you check what has been done. Excessively given or deficitly given. கம்மியாக கொடுத்துருக்காங்களா அதிகமாக கொடுத்துருக்காங்களா? 8% தான் கொடுத்துருக்கணும், 9% கொடுத்துட்டாங்க credited. So 1% extra credited. Okay, so that 1% extra credit you just have to debit it. So that is one way of doing the sum. Okay, show your working clearly, pass the necessary journal entries. For this you have to prepare appropriation past adjustment table, so which is particulars, firm credit debit. For firm 2 columns, then name of the partners Ajay, Vijay. The next Vijay oda credit column, debit column. Then Jay oda credit column, debit column. Okay. Okay, so first what you can do is, see I told you in two way you can do this sum. Either you reverse the wrong percentage. 9% was credited, so debit 9%. Actually 8% தான் credit பண்ணிருக்கணும், so credit 8%. So that is one way of doing it. Another way of doing is find out the error exactly. The first method what I said is easy. You don't need to worry whether it is 1% excessively given, 1% lesser it is given. So always wrong percentage debit, that is reverse, correct percentage correctly you give. Okay, now 1% excessively credited, that 1% alone you can debit. Okay, so logically பார்த்தா இதுதான் கரெக்டாக இருக்கும். So debit %, excess interest credited. Okay, so what is the 1%? For that we need opening capital. Opening capital given, yeah, opening capital given, but it's fixed capital, so capital does not get affected by interest. So 9 lakh la 1%, 1% na 2 zero remove pannu, that is 9,000. So இவனுக்கு ஒரு 9,000 debit, இவனுக்கு ஒரு 1%, 7,000. 7 lakh la 1%, 7,000 debit. Firm credit 16,000. So this is one way. Or what you can do is, இப்போ இங்கே பாருங்க 9% debit பண்ணணும். That means let's first calculate for J. 9% on 9 lakh, it is 81,000 டெபிட்னு வரும். தென் கிரெடிட் 8%, 72, 72,000 கிரெடிட்னு வரும். ஸோ நெட் எஃபெக்ட் என்னது? 9,000 டெபிட். அதான் இந்த 9,000 டெபிட். ஓகே. Okay, so now error has been, there is only one error, only this interest on capital error has been rectified. After all the errors have been rectified, the firms go and check the firms column. Credit side is more na profit, debit side is more na loss. Credit side only we have 16,000, so there is a profit. Distribute that profit. Share of profit. Profit sharing ratio is 7:3. That means debit this 16,000, take it out. Total divide this in 7:10. Total share is 10. Dividing it by 10, 1,600 is one share. 1,600 into 7, 7,000, 42, 7,000 plus 4,200, 11,200. Sorry, credit 11,000, because firm ku debit na partner ku credit, firm ku credit na partner ku debit. Then 1,600 into 3, 4,800 credit. Now check both the sides. Okay, so at last total up. This is 9,000, this is 11,200, this is 7,000, this is 4,800, this is 16,000, 16,000. Okay. Okay, now find out the difference. It is 2,200 credit, and this is also 2,200 debit. So the answer should be like this. For total debit, there should be total and equal credit. Okay, so journal entry is Vijay's capital current account. So it is fixed capital, so you have to use their current account. Vijay's current account debit, Jay's current account credit. So the journal entry is Vijay's current account debit to Jay's current account. That is 2,200. Okay. So narration is adjustment of interest on capital. I'll write the narration. Adjustment of interest on capital provided at 9% per annum instead of 8% per annum. Okay, so kindly bear with my handwriting. My handwriting கொஞ்சம் கேவலமாக தான் இருக்கும். Okay, so with this 19th B over. Then 20th question. Sandhya Limited took over assets of 50 lakh and liabilities of 7 lakh of Guman Limited for purchase consideration of 40 lakh. The payment of purchase consideration was made by the issue of 9% debentures of 100 each at a premium of 25% to Guman Limited. Past journal entries for the above transactions. Okay. in the books of Sandhya. So what we have to do is, first we have to pass journal entry for assets taken over, that is business taken over. You see, value of assets 50 lakh, value of liability of the business taken over 7 lakh, subtract 43 lakh is the net worth of the business. So net worth is 43 lakh, but we gave only 40 lakh as a purchase consideration. So in this we have 3 lakh gain. So gain means we have to credit it to capital reserve. 3 lakh is the capital reserve. So first journal entry is for 20th question A. Sundry assets account debit 50 lakh to sundry liabilities account debit 7 lakh to, what is the name of the company, vendor, Guman Limited. Guman Limited 40 lakh to capital reserve account 3 lakh. So narration is business of Guman Limited taken over. So that is the first entry. Then the second entry is, okay, before calculating second entry, let's calculate number of debentures. So to calculate number of debentures, formula is net purchase consideration divided by issue price of the debenture including discount or premium. So here entire 40 lakh is the net purchase consideration, because there is no partial payment given or any of the acceptance. So net purchase consideration here is full purchase consideration 40 lakh divided by, what is the issue price? Face value is 100 at a premium of 25%. So issue price means including discount or premium. Discount na subtract, premium na add 25. So it is 125. $125 means how much it comes, dividing it by 5 pota 25 இது 80,000, sorry 8 lakh. Again 5 ஆல போடலாமா? 5 ஆல போட்டா 5, இது 1 மிச்சம் 3 6 1 2 3 4 1 2 3 4 1 lakh 60 divided by 5, which means 3 balance 1 2. So 32,000 debentures were issued at a premium of 25%. That's it. Now journal entry for issue of debentures at premium. Second entry is debit the vendor Guman account. Guman Limited account debit to what is the percentage debenture? It is 9% debenture. %9 debenture account to, so Guman Limited, you just have to debit what was credited here, 40 lakh. Just debit 40 lakh. For 9% debentures, number of debentures issued into face value. So it is 32 lakh. Then 32,000 into 25. So that means 8 lakh it comes. That is 25% of this 32 lakh. 25% na half of the half. 32 lakh la half 16 lakh. 16 lakh la half 8 lakh. So journal narration another 32,000 debentures were issued to Guman Limited at 25% premium in full and final settlement. Okay, this is the narration for the second entry. That's it. Question number 20A over. Now question number 20B. Past journal entries in the books of RR Limited for the issue of debentures in the following cases. Issue 9,009% debentures of 100 each at a discount of 10%, redeemable at a premium of 5% after 5 years. So first one 9,000 debentures, 10 rupees discount, 10%. That means on 100 rupees till 10%, 10 rupees discount, 90 rupees issue பண்ணிருக்கோம் 9. So the first entry, so that is adula first one. Okay, I'll write like this. First one வந்து bank account debit to debenture application and allotment account, that is 9,000 debentures, 90 rupees received. So that means 8,10,000. So narration another 9,000 debentures, application money received. Okay, or application money received for 9,000 debentures. Now second entry, debenture application and allotment account debit. There is discount, also there is loss. So you can write it discount loss separately, or you can combine and you can write. I always combine, so I combine. Loss on issue of debenture. So this account you should debit both discount as well as premium on redemptions, or you can write it separately, discount as discount on issue of debenture, then that premium as loss on issue of debenture. Separately to account also you can write. 2, I think this is also 9% debenture. Yeah, 9% debenture. To 9% debenture to premium on redemption of debenture, because in this loss la one portion of loss is premium on redemption, so that we have to credit it to the premium on redemption account. So this is first value, inga irukka value da appdi inga vandrum 8,10,000. so ipo loss evlo 9,000 share ku evlo loss, discount ஒரு 10% 10 ரூபா, premium 5% 5 ரூபா, so total 15 rupees loss. That means 90 plus 45, 1,35,000, right? 90,000 plus adala paadi 45,000, 1,35,000. Debenture always face value, 9,000 into 100, 9 lakhs. So premium on redemption just 5 rupees, 9,000 into 5. In the 15 rupees la 5 rupees da premium on redemption, balance 10 rupees. In the 100 la irukka deficit 90, so 10 rupees discount. So sorry, it is 45,000, 9 into 5, total 9,45,000, 9,45,000. Okay, so it is tallied. So first question over to the second sub question. Issued 5,000 11% debentures of 100 each at a premium of 10%, redeemable at a premium. So on issue there is 10% premium, that means 110 க்கு issue பண்ணிருக்காங்க 5,000 debentures. So first entry, bank to debenture application and allotment account. See, this is question paper solution discussion, so I hope you know all the concept. That's why I am not explaining it in depth, because I have to cover the entire paper. Okay, so it will take a long video. Suppose if you do not understand any particular concept or topic, let me know. Depending on the question, if I can explain it in the comments, I will explain. or if I want to add a separate video for that, then I'll put a separate video for that. Okay, so bank, so we issued 5,000 debentures at 110. Okay, 5,000 debentures at 110 premium, so it is 5,50,000. so issued loss எதுவும் இல்லை, but redemptionல there is loss. So second entry will be like this. That is debenture application and allotment account debit, loss on issue of debenture account to 11% debenture. Yeah, 11% debentures. To 11% debenture to securities premium we have, and we also have premium on redemption of debentures. Premium on redemption of debentures. Okay, so this amount will be this amount 5 lakh what was credited, that is will be debited here. Last வந்து 5,000 டிபென்ச்சருக்கு premium on redemption 5%, 5%, that is 5 rupees. So which means 25, that 25 will go to this, because entire loss is premium on redemption. This is always, I told you, face value 5,000 into 100, and this is premium is 5,000 into 10, so it is 5 lakh, and this is the total 5,75,000 tallied. That's it. Okay, with this question number 20, both the questions over. Okay, so what I will do now is I will discuss 2 more questions, because I have to go little bit outside and need to purchase something for my house. Okay, so because already it is been more than 1.5 hours. Okay, so I will complete this 4 more questions, then I will not end the stream. Okay, I will just cut the stream, I will resume the stream, and yeah, so while you are watching it, it won't be a difficult, it will just continue after the stream gets over. What I am saying is only for those who are watching the stream, just I think probably none. Okay, let's discuss this 4 mark question. First 4 mark question, question number 21. PR Limited forfeited 10,000 equity shares of 10 each at a premium of 4 per share for the non-payment of first call of 3 per share. The second and final call 2 per share was not made. Forfeited shares were reissued at a discount of 1 per share, fully paid up. Pass necessary journal entry for the above transaction in the books of PR Limited. Also prepare share forfeiture account. Okay, so first entry, okay, before starting the entry you need certain rough work. Okay, I will write the rough work here, but you generally use it paper. 10 rupees is the face value, plus premium is 4 rupees. So in this, something has been called and received, something is not called, something is called and not received, something is not called. So the moona na pirikiren. Okay, and it was very clearly said for the non-payment of 3, that means 3 rupees first call was called but not received. Appa in the part called but not received. Second and final call of 2 per share not yet made, call pannala, in the 2 rupees call pannala. So balance face value la 5 irukku, appo 5 plus 4 called and received mottama vandiruchu. Okay, So in the rough work is very important if you want to what pass for future entries without any error. So we need three information: how much amount is called and received from the shareholder, how much amount is called but not received, then how much amount is not yet called. Okay, because not yet called is not a part of the entry, that's why. So first journal, since premium is received, this 4 rupees is received, we have to ignore the premium. We no need to debit the premium. Premium should not be reversed. Okay, premium is received. Only if the premium is not received, that is premium is called but not received, and the category irukuna, then we have to reverse the premium. We have to debit that securities premium which was credited in the due entry. So since premium is received, we just ignore that premium as if that there is no premium on the madri. Okay, so first entry for question number 21 is first journal entry, share. I will write the entry first, then I will write the value. Share capital account debit. Then we no need to debit securities premium because securities premium is fully received. So ignore the securities premium. If it is called and not received, then you have to debit this securities premium here. So as securities premium is received, ignore the securities premium. 2. Share forfeiture account, that is face value received. Face value received, not the premium received. 2. Calls in arrear account. Those who are using calls in arrear account in bank entry have to use calls in arrear. Those who are not using calls in arrear account in the bank entry should credit the respective installment. Okay, so probably here it is allotment only, not received, because nobody can make arrear in application. First call he made arrear, so in between allotment alone is there, so allotment is received. So sorry, in this case here it's first call arrear, so you have to write share first call here. Suppose if you are not writing calls in arrear account while practicing, now you can also write, instead of calls in arrear you can write to share first call, the installment whichever is arrear. So this is the entry. So for share capital what will come? Number of shares forfeited into called up face value alone should come. Number of shares forfeited 10,000 shares, called up face value, here it is. This is what called, 5 plus 3, not premium called. So ignore premium called because premium is received, so ignore it. Even if premium is not received, premium separately will debit. So share capital always face value called, 8 rupees is called. So it is 10,000 shares into 8, debit 80,000. And share forfeiture account we have to credit what the face value received. See, total 5 plus 4 received, but premium received we should ignore. So only 5 rupees of the face value received. So into 5. Arrear, you know, it is first call of 3 per share, that is. So narration is 10,000 shares were forfeited for the non-payment of first call money. That is the narration. So I am not writing the narration just to save time, but I am telling you the narration. Okay, so narration is also very important. Okay, don't think I am not writing narration, so you should also not write the narration. No, narration is very important part of the journal entry, so you should write narration. Just to save time only I am not writing it. Okay, so that is the first question. Second question, we have to reissue the forfeited shares. Reissue, that means all the forfeited shares they reissued at a discount of 1 per share, fully paid upon. So as if the shareholder paid full amount, we are going to issue share. Full amount is 10 rupee. So share certificate will be given for 10 rupee, but shareholder will pay at the discount of 1 rupee, which means 9 rupees only the shareholder will pay. We will receive only 9 rupees. So the reissue entry will be bank account debit, that is 10,000 shares, 9 rupees received. Discount, we will take it, debit it to share forfeiture account, that is 10,000 into 1 to share capital value, it is fully paid up, that is 10,000 into whatever the paid up value, here it is fully paid 10 rupees. So it is 90,000, 10,000, 1 lakh, that is 10,000 into 10. So the narration is 10,000 shares were reissued at 9 per share as 10 paid up. Okay, that is the narration. If you want, you can also check here, this one. Then 10,000 shares were reissued at a discount of 1 per share, fully paid up. You can also use this sentence also as your narration. So with this second entry over, then the last entry is capital reserve. So since it is fully reissued, in case of fully reissued, you can directly subtract amount credited to share forfeiture account and amount debited to share forfeiture account, that is discount. So 50 minus 10, 40,000 is the excess gain which we have to transfer to capital reserve. So the third entry is share forfeiture account debit to capital reserve 40,000, 50 minus 10. Narration is excess gain on reissue credited to capital reserve. So with this entries over, they also asked share forfeiture account. So let's prepare share forfeiture account. Okay, now share forfeiture account la first one it was credited. Okay, so go to credit side of share forfeiture account and opposite account is share capital. So write by share capital value, you have to write share forfeiture nera enna value irukko and value, because it is share forfeiture account that we are posting. So value of share forfeiture only you have to post, but only in particulars we will be writing opposite account. So which means 50,000 credited. Then second entry la share forfeiture account is debited. So go to debit side of share forfeiture account and write to opposite account is again share capital, that is the credit account, but value near share forfeiture is 10,000. So debit 10,000. Second entry also share forfeiture account debited. So go to debit side and write opposite account to capital reserve 40,000. So there is no balance. There won't be any balance if all the forfeited shares were reissued. I just told you a few sums back. If there is any balance in share forfeiture account, means there are some shares should be not reissued. If any shares are not reissued, then their share forfeiture account balance should remain in the share forfeiture account. See, there is no balance in this account because all the forfeited shares were reissued. That's it. With this question number 21 over, let's move on to 22. Wait a minute. Yeah, sorry. Soba, Kalyani and Kaveri were partners in a firm sharing profits and losses in the ratio of 352. The firm closes its books on 31st March every year. On 30th June, Kalyani died. So Kalyani is the center partner. So center, this one. On that date, her capital account showed a credit balance of 3 lakh. On the same date, the firm had a general reserve of 1 lakh 20. Partnership deed provided that balance will be provided. Balance capital, interest on capital 12%. Her share in the profit of the firm till the date of her death calculated on the basis of previous year profit. Okay, the profit of the firm for the year ended 31st March 2024, which is the previous year, 2 lakh 80. Okay, her share in the goodwill of the firm, okay, that is also fine. Okay, so here question number 22, old ratio is 3:5. 3:5. Every time it comes here. Okay, I don't know. So this partner is died, and there is no information regarding what is the new profit sharing ratio or how the continuing partners take the deceased partner share. So what you can do is you just remove that partner share. So this is what the new ratio, and this is what the gaining ratio. Because if you, why it comes like this is, this 5/10 will be taken up, since there is no information, this 5/10 will be taken up by these two partners in the ratio among themselves, which is 3:2. So their old ratio is 3:2. They gain this 5/10 in 3:2. So gaining ratio will become 3:2, and their new ratio also will be in the same ratio, 3:2, after simplification. So you don't need to calculate this. Even if you calculate, you will get the same answer. Then, so let's first calculate her share of profit. Okay, or we will calculate from interest. Okay, interest I will directly calculate in the account. Okay, I will calculate her profit. Profit also we can calculate directly, because they are not asking you to show the calculations. They are asking you to just prepare Kalyani's capital account to be presented to her executor. So what you can do is you can directly prepare Kalyani's capital account. If they ask, prepare what? Show your workings clearly means you have to show all the calculations. Kalyani's capital account. So let's first write by balance brought down, and it was her capital showed a credit balance of 3 lakh. Here it is. So 3 lakh. Then there is general reserve, so she will get her share of general reserve, which is 1 lakh 20. இப்படி போட்டால் ஒரே இதே பேஜில் தான் இருக்குது. 1 lakh 20ல her share is old share 5/10. 5/10 na half of the share, so which is 60,000. Then she will get interest on capital. Her capital is 3 lakh. In that it was very clearly set 12% interest on capital, and she died on 30th June. Okay, I hope you are able to see this. She died on 30th June. 30th June means she stayed in the firm only 3 months, April, May, June. So only 3-month interest we can provide. So this 12 will get cancelled, 2 zeros will get cancelled. What remains is 3000 into 3, 9000. Then by P&L suspense account, it was very clearly said based on previous year profit. Previous year profit is given 2,80,000. Yeah, 2,80,000. In that her share is 5/10 only for 3 months, because she was there in the firm only 3 months, so she will get 3 months profit alone. So this 10 will get cancelled. This 3/12 4, and this 4 வந்து 28 1 2 3, so 35,000. Then we also have what? Goodwill. So goodwill has to be given by, her share of goodwill is 5/10 means half of the share she is having. That is goodwill of the firm. Goodwill of the firm on the 4 lakh. That means Kalyani oda share 2 lakh. That 2 lakh Shobha and Kaveri has to give in gaining ratio. So that will be debited Shobha and Kaveri, credited Kalyani. So go to credit side of Kalyani and write by Shobha's capital, which is the 2 lakh into gaining ratio 3:2, 3/5. Here it is. Okay, 2 lakh. So divided by 5 போட்டா ஒரு share 40,000. 40,000 into 3, 1,20,000 by Kaveri's capital, that is 2 lakh into 2/5, that is 80,000. Okay, I think everything we have done. The capital, share of reserve, interest and capital, profit, P&L suspense, goodwill. There is no drawings, there is no interest on drawings, there is no losses, revaluation something. So there is nothing on the debit side. So just we have to transfer the entire amount to the executor. So let's total up. Total வந்து 500, hundreds எதுவுமே இல்லை, 30, 9, 14, மிச்சம் 1, 7, 10, 20, மிச்சம் 2, 5, 5, 1, 6, 3 lakh, 4 lakh, 5 lakh, 5 lakh 90, 6 lakh 4,000. Yeah, plus 14, 6 lakh 4,000, which will be transferred to Kalyani's executor account. That's it. With this, 4-mark question over. Hope you understood this question. I need little bit break. Okay, I will continue this 6 marks and part B a little late. Okay, don't worry, I will complete it today. Charging கம்மி ஆயிடுச்சு, 34 வந்துட்டு. I also have to charge the device. நான் சார்ஜ் போட்டால் இதில் மைக் போட முடியாது. மைக் போடலைன்னா பேக்ரவுண்ட் நாய்ஸ் எல்லாம் கேட்கும். ஐ ஹோப் இப்போ பேக்ரவுண்ட் நாய்ஸ் இல்லைன்னு நினைக்கிறேன், பிகாஸ் இட் இஸ் ப்ரொஃபஷ்னல் மைக். I'll charge my device for some times and I will go out and I'll do some purchases, then I'll come back and continue. Okay, stream வந்து பாஸ் பண்ணிட்டு தான் போவேன். Okay, so it will continue if you are watching it after stream got over. So உங்களுக்கு எந்த டிஃப்ரென்ஸும் இருக்காது. There won't be any differences in what I am saying now. So it will be like just a continuation only, because I'll cut and I'll resume. That timing delay you won't feel. Okay. Okay. Okay, next let's move on to 6 mark questions. The first 6 marks question what we have is retirement. Okay, there are 3 partners, profit sharing ratio 2 to 1, then their balance sheet as on 31st March 2024 is given, and 1st April the next day. Okay, that is beginning of first day of the next year. Sharma retired, and there are some revaluations given. Sarma was paid in cash brought in by Ratan and Singh in such a way so as to make their capital proportionate to their new profit sharing ratio. Okay, the settlement is done through their adjustment of capital. Okay, this is this information that we will see. Prepare revaluation account and partners capital account. Okay, let's prepare first revaluation account. Question number 23. Okay. Let's look at the revaluations. Plant and machinery is revalued at 2 lakh. So new value is 2 lakh, but the old plant and machinery value is 2 lakh 50. So it is reduced to 2 lakh. So loss, decrease in assets value is a loss. Why this is happening like this? It's getting down. Okay, so 2 okay, let's see. 2 please guys, wait a minute, something is misbehaving with my stream. I think it's now clear. Yeah, the first revaluation is machinery has to be reduced to 2 lakh. That means reduced by 50,000. Okay, so that is what we have written here. To plant and machinery 50,000. And then next revaluation is land and building was to be appreciated by 49,500. Whenever it is given as by, this is the value that you have to increase. If it is 2 or at means difference you have to increase or decrease. By means this is what we have to appreciate. So land and building is to be appreciated. That means gain 49,500. by land and building 49,500. And then provision for bad debts will be maintained at 5% of the debtors. Debtors value 90,000. In that 5% is 4,500. So we have to maintain provision at 4,500 only. But the existing provision is 5,000. So that means we have to reduce the provision by 500 rupees. Provision is a liability. So reduction in liability is a gain. So gain side we have to write by provision for bad debts 500. That is because we have to maintain 4,500. There exists 5,000 in the provision. So 500 provision is written back to profit revaluation account here. Then the next revaluation is this is over. Sarma share in the goodwill. Okay, that is about goodwill. And the last information is about adjustment of capital and settlement of the retiring partner. So revaluations over. There are only 3 revaluation: plant and machinery, land and building, and provision for doubtful debts, that is bad debts. Okay, bad debts, doubtful debts for provision both same. Okay, now look at the debit side. What we have is 50,000. Credit side is also 50,000. So there is no profit or loss on revaluation. So just close it. So partners will not get anything from revaluation account. So revaluation account is over. Now next one, partners capital account. We have to prepare partners capital account, then only we can able to calculate the amount to be brought in by the continuing partners in order to settle the retiring partners. Okay, I think this will be sent. Name of the partners, Ratan Singh Sharma. Okay, let's first write balance brought down by balance brought down, which is 3,60,000, 2,40,000, 1 lakh. 3,60,000, 2,40,000, 1 lakh. $3,60,000, 2,40,000, 1 lakh. Then always follow this order. After writing the balance brought down, first look at the balance sheet, liability side, check any reserves to be distributed to the partners. Yes, there is a general reserve. So this will go to the credit side of all the partners in their old profit sharing ratio 2:2:1. So this 3 lakh divided by total share 5 means one share is 60,000. So these people are having two shares. So 120, 120, 60 general reserve. By general reserve 1 lakh 20, 1 lakh 20, 60. and then what we have is liability side over, so there is nothing to be distributed to the partners. Now look at asset side, is there anything to be distributed to the partners? Like profit and loss account, we have goodwill, existing goodwill, no. Advertisement suspense, no. So we have only have profit and loss account, 1 lakh. So that 1 lakh again 2:2:1 old ratio we have to distribute. So who is the retiring partner? Sharma, he is the last partner retiring. Okay, so old ratio, no, this everybody will get. Okay, so one share is divided by 5 na 20,000 one share, so 40 40 20. So this will go to the debit side of partners capital account. So to profit and loss account 40 40 20. Okay, so from balance sheet everything has been distributed. So after the completion of balance sheet, come to revaluation. So there is no revaluation profit or loss, that will go to partners capital account, so you can just leave it. And then after that, goodwill. So goodwill of the firm was valued at 60 and the retiring partner share was adjusted to the capital accounts of the remaining partners. So that means in this Sharma would share 1/5. Okay, so which is 12,000. This has to be borne by gaining ratio. So there is no information regarding who gained this share, or there is no information regarding the new profit sharing ratio. So in this case, so remove this 1. So 2:2, that means new ratio is equal to 1:1, gaining ratio is also 1:1. So Sharma's share of goodwill has to be borne by gaining partners in gaining ratio. Okay, so debit 6,000 from Ratan and Singh. So to Sharma's capital 6,000. So now credit that to Sharma. By Ratan's capital, Sharma gets 6,000, and by Singh's capital, Sharma gets 6,000. That's it. Goodwill is over. Now the next final information is we are going to settle it. Okay, so how much we have to settle? Balance amount we are going to settle by the amount brought in by Ratan and Singh, but there is no information how the amount is brought in. So let's calculate. So let's first settle his account to cash or bank. What we have, cash account or bank account? We have bank account, so we can write bank account to bank account, final settlement to Sharma. Just write the okay, total we'll write here. We need some more lines to do the adjustment of capital. Okay, so to balance carried on for these two people, not for him. Bank is only for this Sharma. Okay, Sharma credit side total is 1,60,000 plus 12, 1,00,000 1,72,000. So write it on the debit side also, 1,72,000. Debit side already we have 20,000, so subtract that. So 1,52,000 is the amount that is to be settled to Sharma. Okay, so this is the amount that we have to use it while calculating the adjustment of capital of Ratan and Singh. Okay, let's calculate balance carry down of Ratan and Singh. First, total of the credit side. Credit side total 4,80,000 for Ratan, and for Singh it is 3,60,000. Okay, 4,80,000 minus 46, so 4,34,000. Then 3,60,000 minus 46, so which is 3,14,000. 50, 60, yeah. Now bring down the balance for Ratan and Singh by balance brought down 4,34,000, 3,14,000, not for him because there is no balance for him. Now what is going to happen is we are going to adjust their capital. Okay, so go to debit side, leave 2 line and write 2 balance carried down, see working note 1. So we have to do a working note. Okay, so here we are going to draw total. So below total 1 or 2 line you leave it and write working note number 1. What is the working note is combined capitals of Ratan and Singh is, that is 3,34,000 plus 3,14,000. So add them and write it is 7,48,000. 7,48,000. Okay, so this is their capital. Now the next information is we have to add amount brought in by them, that is by Ratan and Singh, brought in by them. See what is the amount brought in by Ratan and Singh. The firm already has a balance of 65,000. Okay, they said that Sarma was paid in cash brought in by Ratan and Singh in such a way so as to make their capital proportionate to their new profit sharing ratio. That is what the information which is given here. Okay, and they didn't say anything about minimum balance, so that means you can utilize this entire 65,000 while settling Sarma. So 1,52,000 is the amount settled to Sharma. In this 1,52,000, 65 firm already has, so remaining only these two people will bring. So which means 1,52,000 minus 65. So which is in the pakka or 35 plus 52. 35 plus or 52, whatever. Is it that they bring entire amount? Sharma was paid in cash brought in by Ratan and Singh in such a way so as to make their capital proportionate to their profit sharing ratio. I think the entire amount to be paid to Sharma is brought in by Ratan and Singh, it seems. We are not touching this bank balance then. This we are not touching because the sentence says Sarma was paid in cash brought in by Ratan and Singh. Okay, so Sarma was paid by the cash brought in by Ratan and Singh. So which means Ratan and Singh has to bring the entire 1,52,000. So that means this 65 we cannot use that the firm's amount. So that entire amount is brought in by them. That is 1,52,000. So total is the new capital of the new firm, that is Ratan and Singh. New capital of the firm. This has to be divided in the new profit sharing ratio. Okay, how much it is? 8 plus exactly it is 9 lakh. So which means new profit sharing ratio is equal 450 450 4 lakh 50,000 4 lakh 50,000. Okay, now we check for both the person. Debit side is higher, so whichever side is lesser, go to the lesser side and write by bank or cash also you can write, no problem. So for who is he? Ratan, debit side is higher, so the total you have to write on both the side 4 lakh 50 and the difference is 16,000 he brings. Okay, then here he also has to maintain, so which means this is the capital that they have to maintain. Both have to maintain 4 lakh 50 4 lakh 50. Ratan is having 4 lakh 34, so he will bring 16 to maintain 450, and Singh is having only 3 lakh 14, so he will bring 1 lakh 36 to maintain 4 lakh 50. So if you add the amount brought in by these two people, it should be the amount settled to Sharma, 16 plus 136 152. That's it. This is the partners capital account. Okay, I think hope this sum is clear. If you have any doubt, please let me know that in the comment section. This is what the working note to calculate. Sometimes there will be some minimum balance to be maintained, so which means that minimum balance you should not touch, so remaining balance you can utilize it to calculate this amount brought in by them. Here since they said that the entire amount is brought in by Ratan and Singh, the entire 152 I added to their capital. Suppose if any of the firm's money we can use, means you deduct that firm's money that we are using. So remaining money only these two people will bring, that remaining money only will be added to their capital. Okay. Okay. Now the next question. Okay. Next question is, there are two partners, profit sharing ratio 3:2. This is the balance sheet on a particular date, 31st March 2024. What is happening on the date? Yaru? அதெல்லாம் முடியாது போங்கடா வரேரு ஓப்பன் பண்ணுறாரு. Sorry. On the date Zen was admitted, so it is an admission. Okay, the new partner share is 4/15. Zen will bring 3 lakh as capital and his share of goodwill premium in cash. So he is bringing the goodwill premium in cash. On Zen's admission, goodwill of the firm was valued at 4,12,000. journal entries எல்லாம் கேட்டிருக்காங்க. Only journal entry தான் கேட்டிருக்காங்க. Okay, so in this 4/15 he will bring as his share of premium. Then there are certain provisions. See, whenever it is a revaluation account is asked, I ask my students, you can directly put it in the account. Just open the account, losses put it on the debit side, gains you put it on the credit side. Suppose if they are asking you to pass journal entries, first mark all loss and gains. So this is my student question paper. She marked everything, so that for all loss one entry, for all gain one entry, combined entry we can pass. Okay, if you want to pass for each loss, each gain, means it will be number of entries will be more, so it will take some time, consume time. So time also we should try to control. Okay, so the provision for bad debts will be maintained at 5% of the debtors. 5% of the debtors value 2 lakh. In that 5% is 10,000, but there is already 7,000 provision. We have to maintain 10,000. So increase in provision is a loss, liability it is. So increase in liability is loss 3,000. That is what she mentioned here as loss 3,000. Then stock will be valued at 2 lakh. So at means we have to compare. At or 2 means we have to compare with the balance sheet value. Stock is 2 lakh 50, but the new value is 2 lakh. So there is a loss of 50,000. Then plant and machinery is again at 4 lakh, compare with the balance sheet value. 3 lakh 50 to 4 lakh. So which means gain 50,000. Yeah, here it is. The next one, patents again at 120. What is the patent book value? 57. So difference in the pakkam over 43 and the pakkam over 20, 63. So 63 gain. Okay, there was a bill of 30,000 for goods purchased which was omitted from the books. There was a bill of a bill means it's an invoice or a bills payable, because there are two perspectives. I don't think it is a bills payable. I think it's an invoice or another name than a bill. I think they are referring to invoice only, it seems. There was a bill of 30,000 for the goods purchased which was omitted from the books. Okay, so bill means it is an invoice. We have to record creditors. So creditors la add agalanda adukku artham. Okay, so increase in creditors, loss. But the thing is that another effect is purchase. Okay, so purchase is ultimately an expense. We do not know when these goods were purchased. If it is last year now, that purchase account would have been closed, deducting it from what it should have been deducted from profit. So not deducted, no. So now we have to deduct, since it is not included in the purchases account of last year, because it is, see, exactly on the books closing date. That is books closing date la da nama admit pandrom. So which means we recently closed 1 year's financial statements. So in such case this purchase account would have been closed. So purchase account is not added with 30,000. That means profit is not reduced by 30,000. So we have to reduce the profit now. Okay, that is one way of understanding. Another way of understanding enna, it's a bill means what? Another name of invoice. So which means it is a credit purchase. So creditor is not recorded. So that means it is a loss, 30,000. So it is correct. So what we have to do is we have to pass journal entries. So for journal entries, I always recommend first to go from balance sheet, liability side. Is there anything to be transferred to partner's capital account? No. Like general reserve, WCR, IFR, profit and loss account, credit balance, nothing. Then go to asset side. Is there anything written off using partner's capital account, like goodwill, existing goodwill, P&L account, debit balance, advertisement suspense account? No. Okay, nothing is there in the balance sheet. So balance sheet is over. One time. And then revaluation entries. So for all loss, one entry. For losses, the entries will be revaluation account debited to respective account. Respective assets or liabilities we have to credit. So we have 1, 2, 3 losses and 2 gains. Yeah, so we will pass entry for that now. It is question number 23 or so question number 23 la B. Okay, so in this first journal entry is for revaluation. Revaluation account debit to what are the account that has losses? Provision for bad debts 3000. Then I think total 3 losses, right? Stock 50,000, creditors 30,000. 2 stock 50,000 to creditors 30,000. That's it. The total loss debited to revaluation account is what happened? 83,000. The narration is losses on assets and liabilities debited to or transferred to revaluation account. Then second one, gains. How many gains we have? See, losses, provision over, stock over, and then plant and machinery and patents we have gain, creditors over. Yes. So now 2 gain we have. For gain, journal entry will be respective asset and liabilities account we have to debit and we have to credit revaluation account. So plant and machinery account debit 50,000, patents account debit 63,000. Plant and machinery account debit, patents account debit to revaluation account. Okay, so which means I think it was 50 plus 63. Yeah, plant and machinery 50, patents 63. Yes, 50 60 1 lakh 30. So for all losses one entry, for all gain. Now what is the gain? There are 2 assets only. So a gain on assets credited to or transferred to, because there is no loss, there is no liability, so that's why we can simply write gain on assets, various assets credited to or transferred to revaluation account. Now next, loss or profit on revaluation account has to be transferred to partners capital account. You see, 83,000 total loss and 1,13,000 total gain, so which means difference is exactly 30,000 is the profit on revaluation account that has to be transferred to partners capital account. For profit transfer entry, revaluation to partners capital account, old partners capital account. So third entry, revaluation account debit to who are the old partners? Mita and Vihan 3:2. Mita and Vihan. Mita's capital, Vihan's capital, 1 lakh 13 minus 83, which is exactly 30, right? Yes. Now that 30, divide it in the ratio. So multiply 30,000 into 3 by 5, 2 by 5. Dividing it by 5, one share or a value 6,000. So 6,000 into 3, 18, 6,000 into 2, 12. Okay. Narration is profit on revaluation account is transferred to or credited to old partner's capital account in old ratio. So this is their revaluation, totally 3 entries. Don't pass a separate entry for each revaluation. If you pass each revaluation, means for all losses, what you will do, 3 entry. For all gain, 2 entry, 5. Then for this 6. They are calling me for dinner. Okay. After this question, I will go for dinner and then I will complete today. Don't worry. So 6 entries you pass பண்ற மாதிரி இருக்கும். So instead of 6 entry, I have passed only 3 entries. Okay. So in this order, after the revaluation, you always follow this order. First, balance sheet liability side, distribution of reserves and profit. Then balance sheet asset side, writing off of goodwill, paid profit and loss account, debit balance, advertisement suspense. Then revaluation entries. Why I say revaluation entries immediately after balance sheet means everything is belongs to old ratio distribution. General reserve old ratio, all P&L balance, advertisement suspense, existing goodwill, everything is old ratio. So let's complete everything that belongs to be passed in old ratio. So after that, you pass journal entry for capital and premium brought in by the partner. Then you distribute the premium to the sacrificing partners in sacrificing ratio. That's why, because if you calculate sacrificing ratio in the beginning of the sum itself, what you will do is you will get mixed up with this old ratio and sacrificing ratio. But fortunately, I think in this sum both are same, sacrificing ratio and old ratio. I'll tell you why. But if it is different, means you will get what you may probably by mistake use the sacrificing ratio in the place of old ratio. That's why. Okay. So now next entry is pass journal entry for the capital and premium brought in by the partner. Capital is 3 lakh, premium we have to calculate. So journal entry for the capital and premium brought in by the partner is cash or bank account debit. You can use bank account also. To what was the new partner name? Zen's capital account. I think he brought 3 lakh or 4 lakh. 3 lakh. 3 lakh was the capital brought in by him. 2, he also brought premium for goodwill that we have to calculate. Entire firm order goodwill on the, it was 4,12,500. 4,12,500 into what was his share? 4 by 15. 4 by 15. Let's first divide this 15 by 4, 5. 3 5s are 15. This one 8 5s are 40, balance 1, 2 5s are 10, balance 2, 5 5s are 25, 20. 3 ல போகுமா 10 15 போகும். ஸோ 3ல அடித்தோன்னா 2 3s are 6, balance 2 22, 7 3s are 21, balance 1, 5 3s are 15, sorry 20. So 27,500 into 4 means double of double. 27,500க்கு டபுள் வந்து 55,000. அதுக்கு டபுள் வந்து 1,10,000. ஸோ ப்ரீமியம் வந்து 1,10,000. 20 2 3 8, கரெக்ட் 1,10,000. So narration is capital and premium brought in by Zen. So now next, this premium we have to credit to sacrificing partners in sacrificing ratio. For this sum, the sacrificing ratio is old ratio only. Why it is same is there is no information that how this fellow Zen got this 4 by 15. So which means this 4 by 15 was sacrificed by Mitta and Vihan in old ratio. ஸோ அவங்க எந்த ரேஷியோவில் சாக்ரிஃபைஸ் பண்ணுறாங்களோ அந்த ரேஷியோ தான் சாக்ரிஃபைசிங் ரேஷியோ. தீஸ் பீப்புள் சாக்ரிஃபைசிங் திஸ் ஷேர் இன் தேர் ஓல்டு ரேஷியோ ஒன்லி. ஸோ தென் சாக்ரிஃபைசிங் ரேஷியோ ஆல்சோ வில் பி 3:2 only. Okay. So the sacrificing ratio is 3:2. We no need to calculate new ratio because they did not ask, only journal entry they asked. So sacrificing ratio, journal entry is premium for goodwill account debit to Mitta's capital account to Vihan's capital account. Premium for goodwill is 1,10,000. Other 3 by 5 he will get, she will get, 2 by 5 he will get. Dividing it by 5, one share is 22,000. 22,000 into 3, 66,000, 44,000. I think that's it. There are no other entries. It is such a simple sum. You are so lucky that you got this much simple sum in 6 marks. See, past journal entry for the above transaction in the books of form on Zen's admission. That's it. Over. So just 5 entries, 6 marks, easy. 3 entry for revaluation, 1 entry for capital and premium brought in by the partner, and 1 entry for premium to be transferred to sacrificing partners in sacrificing ratio. That's it. So with this sum I will go for my dinner. I am not going to end the stream, I am just going to pause the stream. I will resume it from after dinner. Yeah. So what is the next question? 24, right? Yeah. Okay. Wait. Let me check my live. லைவ் வந்துருச்சா இல்லைன்னே தெரியலையப்பா. சாரி கைஸ் ஃபார் மேக்கிங் வெயிட். யா, இட்ஸ் ஓகே நவ். Okay, the next question number is 24. The following information has been obtained from the balance sheet of J Limited as at 31st March 2024. So there is a balance sheet extract is given, that is some portion of balance sheet only. Share capital value is given and note number 1 is given. Authorized capital, issued capital. Okay. With this, see, whenever a question like this, that means it is like a case study questions. Okay, or we can also say a comprehensive questions. இங்கிலீஷில் இந்த மாதிரி கேட்பாங்களே, காம்ப்ரஹென்ஷனா. ஓகே, ஸோ such questions, first read the question, then you go and search the answer for the question. Don't read entire paragraph, just go to the questions part. The total number of shares offered to the public for subscription. So it will be that half offered to the public means issued capital they are asking. So you can find it here. 75,000 equity shares of 100 each. So this is the total shares offered for the public, 75,000. So answer D. Okay, so don't waste time by reading entire paragraphs. Okay, just go to the question part directly. The amount of unissued capital of the company. Unissued capital means out of the authorized capital, how much is not issued? Out of 1,75,000 is issued, so unissued is 25,000. Okay, they are asking value. That means 25,000 into 100, 25 lakh. Okay, but subscribed only 71. So unused, okay, unissued la கேட்டிருக்காங்க. ஸோ அப்போ கரெக்டு தான். அப்போ அந்த 4 lakh ஆட் ஆகுமா? Sorry guys. Yeah, so where are we? The amount of unissued share capital of the company is 75 is issued, so remaining 25,000 is what? Unissued. Only that unissued part is what? Unissued. So not that unsubscribed capital. The subscribed capital of the company is, so in that issued 75,000, only 71,000 shares were subscribed by the public. Okay, so the subscribed capital, okay, 71 fully paid up, 1,000 not fully paid. That means total 72 subscribed. That means 100, these people paid full amount, and there is a shareholder having 100,000 shares is having some arrear, but that is also subscribed. Whether he is paid full amount, not paid full amount, that does not make a difference between whether it is subscribed or not subscribed. He is also a subscribed shareholder. So total 72,000 shares were subscribed. 72,000 shares, 72 lakh less call-in arrear 20,000. So 72, that is this value only, subscribed capital or the value. Okay, which is 71 lakh 80,000. Where is it? Here it is. Okay, okay, correct. Registered capital of the company is nothing but the authorized capital, which is 1 crore, 1 lakh shares. So this is the amount per share not received on the share shown under the subscribed but not fully paid up capital. So amount per share not received, that means arrear they are asking. You see, a person having 1,000 shares is having 20,000 arrear. So which means, what is the per value arrear? 20,000 divided by 1,000, which is 20 rupees is arrear. Something, some installment, we do not know what installment it is. Some installment or installments with the value of 20,000 he did not pay out of that 100 rupees. So which is 1,000 into 20 is what? The 20,000. So per value only they are asking 20 rupees. Then if the shares shown under subscribed but not fully paid up capital are forfeited, share forfeiture account will appear at. Suppose if these shares were forfeited, okay, so what will be the share forfeiture value? That means whatever we received from the particular shareholder only, we will credit it to share forfeiture account. See, out of this 1 lakh, 20 not received, that means 80 is received. So this is what will go to share forfeiture account. Okay, that is what they are asking, 80,000. So share forfeiture account will appear at 80,000. That's it. So these are answers for these questions. So you can quickly complete this 6 months question. Okay, let's move on to the next one. There are 3 partners. Profit sharing ratio is 1:4. On 31st March 2024, their firm was dissolved. After transferring sundry assets other than cash in hand and cash at bank and external liabilities to realization account, the following transaction took place. That means they have transferred sundry assets and sundry liabilities. So you don't need to transfer anything. You just have to pass journal entry for these 6 entries. Okay, which is probably 1 mark for each sub question. So first question, there was a debit balance of 77,000 in the profit and loss account, which was transferred to the capital accounts of the partners. So this is P&L account debit balance. Okay, what is the journal entry for debit balance of P&L account transferred to capital account? Partners capital will be debited. This debit balance P&L will be credited. So partners capital to P&L account. Partners Tashkar, Mehta and Ghosh. 1, 2, 4. Total 7. Taskar, Mehta and Ghosh. Question number 25, right? Yeah. Tasker's capital account. Mehta's capital account. What was the one more person? Ghosh capital account. To profit and loss account. I think there was 77,000. Yeah, 77,000, which is 124. 124 means total share is 7. Dividing it by 7, one share is 11,000. So he is having one share, so he will get 11,000. He is having two share, 22. He is having 4 share, 44. 11, 22, 44. Total 77. Yeah. Narration is debit balance of P&L account are accumulated losses on P&L are accumulated losses debited to or transferred to old partners, that is partners capital account. Okay, debit balance means loss only has been accumulated, so you can write like that also. Then first entry is over. Now second sub question. The firm had investment 4 lakh whose market price was 4 lakh 20. The investment were taken over by the partners in their profit sharing ratio at market price. Okay. See, all the assets have been transferred to realization already. So this asset account you cannot use because that asset has been closed by transferring that value to the realization account. So now no asset exists, no liability exists. So asset taken over entry at the time of dissolution is partner capital to realization account. That is what the entry. Now all the partners are taking over this value. So debit all the partners capital, this 4 lakh 20 in their profit sharing ratio 1 to 4. To realization account you have to write. Should not write investment because there is no investment account. So journal entry is again debit these people. Tashker's capital account debit. Mehta's capital account debit. Gosh. To realization account. Which was 4 lakh at market price they set 4 lakh 20 only, right? Yeah, 4 lakh 20. 4 lakh 20 divided by 7. One share is RL 42 60,000. So he is having one share 60. He is having two share. Yaar 120 into 4 or nang 24. That is double of his share, right? Yeah. The total is 3, 4, 420. Yeah. Narration is investment taken over by partners at market value in their profit sharing ratio. That is what the narration of the second sub question. Kindly don't ignore narration. I am not writing it. That is because just to save my time, because I have to complete it little bit faster also, that's why. It's already what, 3 hours over. Okay. The third question, the book value of debtors was 8 lakh and the provision for bad debts was 40,000. Okay, this is book value. Okay, these two values would have been transferred to realization account. So you don't need to worry about this 8 lakh, this 40,000. So now what we have to do, debtors realized 90,000 of the book value and the debtor of 5,000 which was previously written off as bad debt paid in full amount. So in this 8 lakh, 90% of the value came. For that entry is bank or cash account to realization. And then we also recovered 5,000 bad debts recovered, previously written off. For that also entry bank to realization. So you can combine this value. So either 90% means 10% you reduce. So 8 lakh minus 80,000, 7 lakh 20,000 debtors recovered. 7 lakh 20 plus 5. So 7 lakh 25,000 total money received from debtors as well as bad debts recovered. For both same entry, you can combine. You don't need to write two entry. So third one entry, cash account or bank account, anything you can write. Two, that is 8 lakh 90%, 7 lakh 20 debtors realized plus 5,000 bad debts recovered. So total 7 lakh 25, 7 lakh 25. Okay. Then fourth sub question is, Ramlal, a creditor of 2 lakh, took over furniture of book value of 2 lakh 50 in full settlement of his claim. Since it is full settlement, see, there is no journal entry for asset taken over by third party liability at the time of dissolution, because journal entry for closing a liability we will debit revaluation account. For closing an asset we will credit revaluation account. So journal entry will be like revaluation to revaluation. Loss also we transfer to revaluation, gain also we transfer to revaluation. So it will be like everything will be revaluation account only we will use. So no entry for this one. Okay. Out of the total creditor, one creditor only accepting this asset. So for this no entry. No entry for 2 lakh value of creditor accepting 2 lakh 50,000 value of furniture. That you better you write it. I don't know whether the evaluation team they're expecting this answer, so it's better you write no entry for 2 lakh creditor, or you can write the name of the creditor. No entry for Ramlal taking over furniture of rupees 2 lakh 50. Okay. But whereas remaining creditors allowed a discount of 10%, no per annum. So in this, on their claim of 2 lakh 20. So there are remaining creditors to whom we have to pay 2 lakh 20, and they accepted, they gave a discount of 10% on this 2 lakh 20, that is 22,000. Subtracting 2 lakh 20 minus 22, we will get 1 lakh 98. We settled. So any settlement at the time of dissolution is realization to bank. Any receipt is bank to realization. Any payment is realization to bank. So journal entry is realization to bank. I'll write it here A and then B, because two part is there in that. So first half, one creditor no entry, another creditor entry is there, that is realization account debit to bank account, which is 2 lakh 20 minus 22. So 1 lakh 98. 1 lakh 98. Okay. Yeah. So journal entry is remaining creditors were settled at 10% discount. That is the narration for this second part. Now with this sub question 4 over. Now let's move on to the fifth one. Expenses on realization amounted to 50,000 which were paid by the firm. So that who has to bear the expense? There is no information here and there is no information here also. That means expense is borne by the firm. If there is no information who has to bear this expense, then it is assumed that the firm will bear that expense. And who has to pay the expense? Firm. It was very clearly given. The firm paid it. So expense borne by the firm, paid by the firm. That means realization to bank. So same entry will come. Firm's liability, firm is paying. Means this is the entry, realization to bank. You can also write cash, no worries, to bank. Cash account also you can write. How much it was? 50,000. Narration is realization expense borne by the firm and paid by the firm. Or you can simply write realization expense paid by the firm because you have debited to realization account. That means it is borne by the firm only. The last sub question. Gain on realization amounted to 42,000. It is realization account gain, profit. For that entry is realization to partners capital account. 42,000 has to be divided among the partners in their ratio. Realization account debit to Taskar Mehta Ghosh. Taskar's capital to Mehta's capital to Ghosh capital. Profit was 42,000. So total share is 1. So profit sharing ratio is 1:2, 2:4, right? 1:2:4. Yeah. So total shares 7. 7 divided by 7 means 1 share is 6,000. 2 share is 12,000. 4 share is 24,000. Okay, 30, 42. Yes, that's it. With this, question number 25 over. Then the last question of this last two questions of part A. Okay, this time we have two 6 mark questions from issue of shares, right? Yeah, both this is 26 also issue of shares, and then this 24 is also issue of shares. There were no questions from debentures. It happens. CBSE is always unpredictable. Okay, what is this question? DDG Limited invited applications for issuing 75,000 equity shares of 75 each. Face value is 75 at a premium of 25. The amount was payable on as follows. That means 40 per share on application. Always write this rough work: 75 face value plus 25 premium. Okay, this is issue price. Now divide 40 rupees application. There is no information regarding whether any premium is included here or not. So no premium is included, and it was very clearly given next installment, first and final call, including the 25 premium. So which means out of this 75, 40 rupees is application and allotment, balance 35 first and final call, plus this 25 premium. So that means 60 rupees first and final call. Applications for 1,25,000 shares were received. Applications for 25,000 shares rejected, and the application money was refunded. Shares were allotted to the remaining 1 lakh applicants pro rata basis, that is for 1 lakh 75 allotted. The excess money received with the application was adjusted towards sum due on first and final call. Govind to whom, okay, this is, we no need to read entire sum for issue of shares. So as of now only pro rata, till pro rata you read. This is pro rata and excess money. So for this you have to prepare a table that I always advise my students. Okay, I will teach you this table now. That is number of shares applied, number of shares allotted, excess application money, and you know application money per share is 40 rupees. I will write this in red color. And then utilization of excess money. Utilization of excess application money. Only 2 columns will come, because excess money either we have to give it to first and final call, the only next installment we have, or we have to refund. So for calls, then if there is anything excess over call or any rejected, means we will refund. So this is the table that you have to follow. Here we have only 2 category. They said very clearly that 25,000 applications were rejected, that means nothing allotted. So entire application money is extra, that means one share is 40 rupees. Then for 25,000 shares, 25,000 into 40, how much it comes? So into 4 means double of double, 25 double 50, 50 double 1 lakh, 1 lakh no 0 sata, 10 lakh excess money. Entire application money is extra, so you cannot utilize it for calls because it is rejected, so you have to refund it. Then out of that we received 1,25,000 applications. They said 25,000 applications only rejected, so remaining 1 lakh applications were allotted on pro rata basis. So remaining we have 1 lakh applications, we offered only 75,000, so maximum we can allot only 75. Here also excess application 25,000, 1 lakh 75 allotted, that means 75,000 shares application money transferred to share capital. Balance 25,000 shares application money is what we are having in hand, so that is also 10 lakh. And they said very clearly excess application money was utilized towards sum due on first and final call, next installment. So next installment is 75,000 into 60, so it was huge amount. So 10 lakh is lesser only, so entire 10 lakh you give it to call. Okay, that's it. Okay, so number of shares applied column should be the total shares issued, so total shares applied by the public 125. Number of shares allotted column, second column should be this column. This column should be number of shares issued. how much we issued? 75. So total of that column should be 75 only. We cannot allot more than what we issued. Then excess application money, leave it. So that then we need this two amount column for the second entry. Okay, so let's go on past journal entries. The first entry is bank to share application and allotment account. Share application and allotment account. That means we are receiving 1,25,000 applications and one application money is 40 rupees. So 125 into 4 means double of double. 125 double 2 lakh 50, 2 lakh 50 double 5 lakh. 0 seta 50 lakh is the total application money we received. Okay, narration is application money received for 125,000 applications. Then second one, share application and allotment account debit. Two allotted applications will go to share capital account. Then excess is what? This two column, this and this. This call column we will give it to calls in advance account. To calls in advance. Then this refund column, bank, we will pay. So share application and allotment account debit 50 lakh to share capital, that is how much we allotted? 75,000 allotted. 75,000 shares for application money 40 rupees would have been transferred to share capital. 75 into, that is double of double, 150, 3 lakh, that means 30 lakh. Calls in advance, we have this column total for call in the column total 10 lakh. Then refund column total is what? Bank, that is also 10 lakh. Now check total debit and credit equal 50 lakh, 50 lakh. Narration is application money transferred to share capital account for 75,000 for allotted shares or 75,000 shares. Excess application money adjusted, okay, this and refunded. This is the second entry. Now third entry is allotment money due. Sorry, first and final call here, no allotment, right? Yes, application allotment both together is first installment. Second installment, share first and final call account debit to share capital account to securities premium. That means it was total here 60 rupees, 35, 35. So for 75,000 shares is 60 rupees total first and final call. So which means 1 2 3 4 30 3 42 45. So it is 45 lakh. I mean share capital 75,000 into 35. 75 into 35, how much? 25 2 37 15 1 22 12 மிச்சம் 6 0 3 0. So this is 26 lakh 25,000 and this one is 75,000 into 25 and how much this comes? 5 already at போட்டுக்கலாமே சார் 5 25க்கு 5 மிச்சம் 2 32 37 10 மிச்சம் 1 15 18 lakh 75. Check whether it is correct or not. 75, if you add that, it is 27. I don't know when is the stream cut. I was explaining something. Okay. What I was explaining is, generally we transfer excess money to share allotment. Okay, because first installment would be application, second installment would be share allotment, so we give it to share allotment. So in bank entry of the share allotment, we subtract what was already received in this transfer entry. But here excess money transferred to calls in advance account, but due entry is first and final call account. So this both are not same, so you cannot deduct in the bank entry. So instead what you have to do is, this calls in advance account you have to close by debiting it while passing bank entry of this share first and final call, like this. The fourth entry will be bank account debit. So we have to check any arrear is there or not. Now only you have to check. You see, Govind, to whom 1500 shares were allotted, failed to pay first and final call. Namita, who had applied 2000 shares, also failed to pay first and final call. Shares of both Govind and Namita were forfeited. Okay, till forfeiture only they are asking. So 1500 shares allotted, Namita 2000 shares applied. Okay, that matters a lot. So let's first write the entry, then we will calculate the value. See, bank entry, we also have to debit calls in advance, we also have to debit calls in arrears. This is fresh account we are opening. This is closing of the calls in advance which was credited here. So this is this amount excess money we are utilizing. It is in the calls in advance. Okay, this is the excess. Why we put excess money of calls in advance is because why that installment is named as call. Whenever I want, I will call. So we do not know whether it will be called in near future or very long. So that is why we just put it the excess money in calls in advance. So whenever we call it, that time we will take it from that account. So now we have called it, so that advance account we have to close it by debiting it. This is arrear is a debtor. Okay, debtor means we debit only. To share first and final call, which is this value. So generally what we do in allotment, from this value we subtract this value and we write here 35. Now for this advance is different account, so from this 45 we are not subtracting, instead we are debiting that value 10 lakh here. Okay, now we have to calculate arrear. So for that you have to prepare working note. So let me prepare here working note number 1, calls in arrear, calculation of calls in arrear. Let's first calculate for who is that fellow having 1500 shares. Govind is having 1500 shares. So for that, see, you cannot directly go and multiply 1500 into 60. The reason is, he no need to pay entire 60 rupees. Everybody comes from the pro rata group, so that means everybody is having some excess money. Okay, so that means we have to find out what is Govind's excess money. That Govind's excess money we have to subtract from Govind's due money. Then net amount only is what arrear. So to calculate that, we need how much he applied, how much he got allotted. So what we have is 1500 shares allotted. So for this, use this ratio, applied allotted ratio. Okay, applied, all belong to this category. 1 lakh is to 75, that means 100 is to 75. Okay, 100 is to 75, that means 4 is to 3. So what we have, 1500 share of him allotted. What we need, how much applied. So what you can do is, you can do this in that is this is x value. Okay, multiplication of this 2 and multiplication of this 2 will be same. Like that also you can calculate. There is mind calculation also. I will tell you that mind calculation. That means, see, according to this 3 into x is equal to 4 into 1500. That is 3x is equal to 1500 into 4. That means x is equal to 1500 into 4 divided by 3. That is 500 into 4, 2000. Okay, now let me tell you now how to calculate in mind. See, this is 1500 shares allotted. Convert this 3 into some 15. That means into 5. Then here also into 5, here also into 5. So that means 15, 3 into 5, 15, 4 into 5, 20. So 4 is to 3 ratio can also be written as 20 is to 15. That means for every 20 shares applied, 15 share allotted. Or we can also say like this, for every 15 share allotted, they should have applied 20 shares. Then what if 1500 share allotted at 20 la 2000 shares applied. So you don't need to calculate this step. You can directly do these calculations. You can do it on mind. Okay, suppose if you are not able to do it on mind, then follow this x step, cross multiplication. That is multiplication of this side, this 2 and this 2 will be same. Okay, so he applied 2000 shares, he allotted 1500 shares. That means 500 shares application money will be excess money that we have to deduct from his first and final call due money. So what is first and final call due? He was allotted 1500 shares. First and final call per share is 60 rupees. So which means 90,000 due. Subtract his excess money, which is 500 shares application money extra. He applied 2000 shares, he got allotted only 1500 shares. That means 500 shares application money would be in our hand. So application money 40. So 500 into 40, 20,000 is his excess money. So arrear is 70,000. This is the calculation of Govind arrear. So in this one arrear we got, which is 70,000. Now we also have to calculate it for there's one more person, Namita, who applied 2000 shares. Same. I think you no need to calculate this one. See, he also applied 2000, right? He also applied 2000. That means he got allotted 1500. Then she also would have got allotted 1500. His excess money 20,000 means her excess money is also 20,000. His due is first call due is 90,000 means her due also 90,000. That means his arrear 70, her arrear is also 70. We no need to calculate this. and waste time. So 1,40,000 is the total arrear. So subtract these two value. 10 lakh subtract panna 35 lakh. 35 lakh minus 1,40,000, 33 lakh 60 is the money received on first and final call. Then next we are going to forfeit these people share. Both are having 1,500 shares. So share capital account debit. What is the entry number? It is 5th entry. So we are having what? Share securities premium in first and final call, which is not received. So securities premium is not received means we have to debit securities premium. Okay. Securities premium account debit. 2, I will write the entry first, then I will fill the value. 2 share forfeiture account. My device is little bit slow, I don't know why. 2 calls in arrear. I already told you, share capital forfeiture entry, we have to debit number of shares forfeited 3,000. Govind or Gopal, his shares allotted 1,500, her share allotted also 1,500. So 3,000 shares into called up face value. Here first and final call they did not pay. That means till final call it is called. So entire 75 is the face value. Entire 75 has been called. So amount to be debited is 15 மிச்சம் 1 21 22 2,25,000 is debited. Okay. Then securities premium reserve we have to debit, but you have to be very careful in one situation. When securities premium is there in the installment where the excess money is adjusted, and that particular installment the shareholder makes arrear. I'll tell you again. Securities premium is in one installment, and that installment is where excess money is also adjusted, and that installment is where that particular shareholder made, that is that particular shareholder what did not pay. Okay. So everything applies first and final call. This is the installment where there is securities premium. This is the installment where there is excess application money. This is the installment where the shareholder did not pay the money. So why I said this is, though you cannot simply say that securities premium is 3,000 into full 25. May be correct, but for that we have to verify, because in this installment some excess money received. So sometimes excess money is received excess money received goes towards premium also, which means you just segregate this 90,000. What is this? 60 rupees. 60 rupees la 35 share capital, 25 premium. So which means what? 15 into 35 face value capital required, 15 into 25 premium required out of this 90,000. So separate this 35,000 in 15 into 35 25 2 7 15 1 4 52,500 is the face value required. That means remaining 37,500 is premium required. You see excess money is just 20,000. So that means first we will apply it for face value. Suppose if this is 60,000, this 20,000 is 60,000 means face value required is only 52,500 only, but what we have is 60,000. Okay, so extra 7,500 probably would have adjusted toward premium. So premium is partly received. So what we have to debit here? Premium that is not received. In this case, it is fully not received because excess money is adjusted towards face value alone, not premium. So you can directly write 37,000. Sorry, 3,000 into 25 means 75,000. So why this came 75 na? Here it is 37,500 only for one person, Gopal. Same is for Namita also. So 37,500 plus 37,500, 75,000. Then share forfeiture account, how much is received? For 3,000 shares, application money 40 received, plus that excess money is received towards first and final call face value. Only face value received should come. Same again I will tell you. Suppose if 60,000 is the excess money, this excess money is 60,000. That means 52,500 only face value received. So here you have to write 52,500 only. Because 7,500 premium received. Premium received we have to ignore. Okay. So this is application received, first application allotment. This is first and final call partly received. So total money received is, how much it is? 1 lakh 20 plus 20, 1 lakh 40. Calls in arrear, you just write all the calls in arrear of these two people because it is written together, forfeited together. Oh, how much it came? 140. 140 plus 120 plus, okay, sorry, it is 40. Why it is 40 na? Why you tell me? I made a mistake. There is some delay, is there? Yeah, it is 40,000. So 120 plus 40, 160. Why it is 40 now? See, this is 3,000 into 40, 1,500 of Gopal, 1,500 of Namita. Sorry, Gopal or Govinda, whatever it is. And this is 20,000. This 20,000 of Gopal plus another 20,000 of Namita. Okay, received 40,000. Then calls in arrear, total calls in arrear of both the people, 70 plus 70, 140. And it should tally at last. See, 3 lakh tallied. Okay, that's it. This question over with this. Okay, hope the question answer is clear. Kindly let me know in comments if you have any doubt. Okay, let's move on to the next question. That is the last question of part A. Current limited invited applications for issuing 80,000 shares of 80 each at par. So this is face value is 80 only. The amount was payable as follow: on application and allotment 30 per share, on first and final call balance. So there is no premium involved, that means balance is 50 rupees. Applications for 140 shares received, 20 shares rejected. Okay, that means balance 120 allotted on pro rata basis. 120 ki in the 80 allotted. Excess money received with application was adjusted towards sum due on first and final call. Okay, here also same, like we have to give that excess money to calls in advance. Ravi, who had applied 1,200, okay, this is arrear. Okay, not this is arrear, sorry. Oh, thank God. Ravi, who had applied 1,200 share, paid the entire money along with this application. So along with this we are receiving one excess up one what full application money we are receiving. Okay, so this is little bit difficult sum, so you have to be very carefully listen this sum. Chaman to whom 2400 shares were allotted failed to pay first. This is normal arrear. Past journal entry for Abusi. They did not ask any Chaman shares were forfeited. There is no reissue. Okay. Open calls in arrear account and calls in advance account whenever necessary. Open calls in arrear, calls in advance means they are asking you to use this account. They are not asking you to prepare ledger account. If they say this, they will say prepare calls in arrear account. They will not say open. Open means there is an option. Without opening calls in arrear, you can pass journal entry, or by opening calls in arrear account also you can pass journal entry. So that is what they are asking. They are asking you to pass journal entry by opening calls in arrear account. So that does not mean that you have to prepare ledger account. Okay, it's only journal only they are asking. Fine, let's start with the table, pro rata table. Same. That is number of question number 26 B. Number of shares applied, number of shares allotted, excess, application, money, then utilization of excess money. Here also it's only two column. That is, one is for calls, another one is refund. Okay. So it was very clearly said 20,000 shares rejected. So it is 30 application money refunded. So first 20,000 shares, nothing allotted. So one share oda application money 30 rupees. So 20,000 into 30, it is 6 lakh. So 6 lakh is refunded. Remaining how much applications are there? Total applications received 140. Remaining 120 is there. So remaining got allotted. The remaining 80,000. So 120 ki 80 allotted. Maximum we can allot only 80 because we issued only 80. So excess is 40,000 applications. Excess 40,000 into 30, 12 lakh excess application money. So that we have to check. Okay. So next installment is 50 rupees. We allotted 80,000 shares. So next installment required is 80,000 into 50, which is 40 lakh. But what we have is only 12 lakh. So entire 12 lakh you give it to call. This we have to check. Without checking the required amount, don't give this excess money. Sometimes this excess money will be more than what is required. So in that case, excess over this we have to refund. Yeah, we also have some what is that? One guy paid full amount, right? That we have to refund. One guy paid full amount. That guy share alone, you write it separately. Okay, how to calculate that is, you see this 1,20,000 ki 80,000 shares allotted, which means 12 share ki 8 shares allotted. How much he applied? 1,200. So the ratio is 12:8. That means he applied 1200. Then how much he would have allotted? Obviously 800 shares allotted, but he paid 1200 into 30 rupees he paid. So excess money 30, sorry, he paid 80 rupees. He alone paid 80. Remaining all the people paid. So what we are going to do is, from application we are going to remove 1200, from allotment we are going to remove 800. So I mean this part. So from this part we are going to remove 1200, and we, from this part we are going to remove 800. I will just write like this. I will strike out and write. Okay. So because from 1,20,000, 1200 if you remove means 1,18,800, balance 1200 here. From this 80,000, 79,200 here, and allotted 800. Or yeah, because for him excess application money is different, that's why. Now excess application 40,000, 40,000 into 30 in the 12 lakh, but which includes 400 excess application money of him. So 12 lakh minus 400 into 30, 12,000. That means 11 lakh 88,000. Okay. Okay, you can also cross check like this. 11 lakh 88,000. So 1,18,800 applied, 79,200 allotted. So excess application is 600. 1 plus 8 9 3 8 18 மிச்சம் 10. So into 30. So 30 6 18 மிச்சம் 1 27 28 மிச்சம் 2 9 plus 1. Yeah, it's correct. So this is the excess money for these people. So now why I wrote like this is, for him excess money is not 1400 into 3. He applied 1200, and his excess money is not 400 shares. He gave entire money. So that means he gave 1200 into 30, which is 36. We should not write excess money of 800 shares, that is 400 shares alone. Okay, he paid next installment for 1200 shares he paid, but we don't need that much amount. You check he got allotted 800 shares. What is the split up? It was 30/50. Yeah, 80 rupees was the face value, which was split into first application allotment 30, first and final call 50. Okay, so he got allotted 800 shares. He has to pay for the next installment 50 rupees. 800 into 50 is 40. Okay, for 40,000. But how much we have here? 36. Okay, so 36 you subtract. Okay, so his excess money is little bit more than other people's excess money. Okay, so that's why this is an unique sum. Okay, I hope this is clear. Once again I tell you, first I wrote, I didn't consider this fellow's share. I just wrote remaining applications were there. Out of 140, 20 rejected. So remaining 120 ki 80 allotted. That is no doubt in this. That fellow, who is that? This fellow also falls in the same category. Okay, but the thing is, he paid entire 1200 shares. Okay, entire money, he 80 rupees he paid. Other people, they paid applied share 30 only they paid, but he paid applied share 80 rupees he paid. So for him alone, excess money will be more. Oh, that is why. But allotted is same ratio. For 120 ki 80,000 allotted na, that is 12:8 ratio. Okay, then 1200 ki 800 allotted. So remove from total application and the total allotted this fellows applied share and allotted share. Okay, so this category 1,20,000 total applied. In that 1200 his application. We are going to show it as a separate category. So subtract 1200, which is 1,18,800, and allotted 80,000. In this, remove this fellow's 800 allotted, which is 79,200. Now excess money, earlier we calculated 12 lakh. In that, his excess money is 400 shares excess money. Excess money alone, this is 400 into 30 only we multiplied. So 400 into 30, 12,000. 12,000 if we subtract means it is 11,88,000, or else you can also calculate like this: applied share minus allotted share here. That means this is excess application for this second category into application money 30. So which is 11,88,000. Now calculate this fellow's excess money, which is a little bit unique. 30, yeah. Sorry guys, I made a big mistake. It's not 30, it is 80, no? That's why I put here separately. He paid 80, right? Then, yeah, so what he paid entire for 1200 share, he paid entirely. So what is excess? You see, there are two excess for him. Okay. See, he gave this 1200 shares 80 rupees he gave. Okay, but we transferred, allotted and transferred to share capital only 800 shares, application money 30. So which means 400 share application money excess. My system is little slow. 400 shares application money extra, that is 12,000 plus 1200 shares 1200 shares 80 rupees. The next installment 50 rupees. 50 rupees also extra. So we are having his excess money, that is application la 400 shares application money extra irukku. Then he paid 1200 shares next installment also, which is 1200 into 50, that is also extra, which is 60,000. So we see total excess money is, that is what I was wondering, why is excess money is below required amount. So 72. Now you see how much is next installment required. He got allotted 800 shares. Next installment is 50 rupees. So 800 into 50 is 40,000 only required. How much we are having? 72,000. So we will give it only 40,000. Balance 32,000 we have to refund. This is the most important part. That's why I said this is a difficult sum. Okay, so we are having two excess money. Hope you understood. If you have little bit confusion means again rewind and see. Okay, this is application excess money. This is next installment entire applied shares excess money. So So why here 400, why here 1200 na? He applied 1200 shares, 800 shares application money transferred to share capital, balance 400 shares application money extra, and he also paid 1200 shares 50 rupees, which is extra, which is also extra only. So that is why 2 excess money is there, which is 72. But next installment what we need is 800 shares or 50 da namak venu, which is 40,000 only. So from this 72 we will take 42. So this fellow no need to pay the next installment, other people will pay. Okay, so still we have 32,000 extra, which we will refund. So at last we need total of these two columns. That means for calls in advance account 12 lakh 28,000 received, and refund is 6 lakh 32. This is why I said this sum is difficult. Okay, now the first entry is bank account debit to share application and allotment. So we received 1,40,000 shares 30 rupees plus the 1200 share next installment or 50 rupees. Okay, which is 1,40,000 into 1,40,000 into 30 na 3 lakh 4 lakh 20 42 lakh. இது ஒரு 42 lakh வருது, ரைட். 30 42 1 2 3 4 5 5 42 lakh ப்ளஸ் இது வந்து ஒரு 60,000 வருது, which is here this one. So total money received is 42 lakh 60,000. So now second entry, debit that account, share application and sorry allotment account debit to share capital to calls in advance account to bank. No securities premium. Yeah, so just debit what was credited in the previous entry, 42 lakh 60,000. share capital we will be transferring allotted applications. So that means we allotted 80,000 shares and its application money 30 rupees. So move to 24 lakh. Calls in advance total we have here 12 lakh 28. At refund we have here 6 lakh 32. So add this 36 30 40 42 lakh 60,000. So it is tallying. Okay, now next entry, due entry. சார்ஜ் வேறு இல்லை, ஸ்பீடாக போனால் நல்லா இருக்கும்னு நினைக்கிறேன். Wait a minute. Slow ஆகிடுது சார், இட்ஸ் ரைட்டிங் லிட்டில் பிட் ஸ்லோ பிகாஸ் ஆஃப் நோ சார்ஜ். Yeah, so now due entry is share and final call account debit to share capital. So which is 80,000 into 50, 40 lakh. Okay, so is there any arrear? Yeah, Chaman 1200 share allotted, failed to pay the first fee, we have arrear. So similar to the previous sum, we also have arrear. We also have to close this advance account by debiting here in the bank entry, because we are going to utilize that money in the calls in advance account now. So journal entry will be bank account debit, calls in advance account debit, calls in arrear account debit. So this calls in advance is closing of what was credited here, and this one is opening of a fresh arrear account. 2 share first and final call, which was credited there, debited there 40, that is what here 40 lakh. In that calls in advance, here we have 12 lakh 28. Arrear we have to calculate, so let's calculate. Working note, Chaman's arrear. For that we need applied allotted ratio. We already calculated it, it was 12:8. Okay, for all the people in the group, they share the same ratio. How much he allotted? So applied allotted 2400 shares. Okay, so just what you have to do is just a small space. Okay, right here 2400 allotted, so x. So what I said cross multiply 12 into 2400 is equal to x into 8, or you can do it in mind itself. This 8 must be a multiple of the value here 2400. Okay, leave the 100, so leave these zeros. So how many 8 is 24? 3. So multiply both the side 3. So that means this is 24 and this one 36. Same ratio only, right? So, yeah, both the side I have multiplied 3. Okay, which means 24 share allotted people must have applied 36 shares. So 2400 shares applied person must have, allotted person must have applied 3600 shares. So this is what applied. So you no need that calculation. So now calculate first and final call, first and final call due. He got allotted 2400 shares, first and final call money 50 rupees. So due is 1,20,000. That means if you multiply by 100 now, it is 2,40,000 divided by 2, 1,20,000 less his arrear money, advance excess money, less excess application money. So this fellow is having 1200 shares extra. So 1200 into 30. Why 30? Excess money is only application money only extra. So excess application money, 1200 applications extra. So which is 36,000. Subtracted in the pakkam 20 and the pakkam 16 na 84, 110, 120. Yeah, so 84 is the calls in arrear. 84. So this will come here. Okay, what is the total? Sorry, 12 lakh, 13 lakh, 12,000. So 40 lakh minus 13 lakh 12,000. So 13 lakh if we subtract now, it is 27 lakh. 27 lakh minus 12, 26 lakh 88,000 is what the money that we received. Okay, now next we are going to forfeit. With this everything is correct. Sorry. Now next we have to forfeit this fellow having 2,400 shares, did not pay what first and final call of 50 rupees. So there is no premium, so you no need to worry about whether we have to debit or not. Directly go on pass forfeiture entry. It's forfeited, right? Chaman shares were forfeited. Yeah. So fifth entry is share capital account debit to share forfeiture account to call scenario account. So we are forfeiting 2,400 shares of Chaman, and we have to multiply called up face value. Face value is 80 rupees. I was having in mind 80, but by thinking something I wrote 50. 80 only, right? Yeah, it is 80. So which means 30 32 32 மிச்சம் 3 16 19 1,92. So share forfeiture account we have to credit with the money face value received from the shareholder. So he got allotted 2,400 shares, so he paid 30 rupees of application. Next installment due 120, but arrear is 84 only, so that means 36 received from the excess money. So 36 received, so there is no premium, so you don't need to worry whether it is premium received or face value received. Everything is face value received only. So total is how much it is? 24,000, 48,000, 72. 60 plus 12 72, 72,000. 70 plus 30 1,08,000. I think it is 1,08,000 correct. Then 84,000 arrear. There is only one arrear, that is his arrear alone. Total 192, 192. It is tally. That means the sum is correct. Yeah. Hope this sum is clear. With this part A is over. Let's finish this part B faster. The current ratio of Magnum Limited sorry, the current ratio of Magnum Limited is 2.5:1. Which of the following transaction will result in decrease in this ratio? Okay, see, in order to decrease a ratio, see, current ratio means what? Current asset divided by current liability. So there are certain possibilities of decrease. Numerator alone should decrease, or denominator alone should increase, or since the ratio is above 1, okay, above 1 means in order to decrease both has to increase. That means same value, numerator and denominator. So these are the three possibilities of what? Yeah, three possibilities of decrease in this ratio. Either numerator alone has to decrease, or denominator alone has to increase, or both has to increase. Okay, that is what the possible cases. You just check it. The two is, I will give you some examples. I am not explaining this question. I am just explaining you this possible cases. Okay, just opposite was increase. That means what? Numerator alone should increase, denominator alone should decrease. Since the ratio is above 1, 2.5, both numerator and denominator has to decrease in order to increase. Okay, just check it. 2.5 is to 1 means I will write 25 lakh, so 2 lakh 50 divided by 1 lakh. So which means what? Numerator alone decrease. 50,000 I will deduct from current asset. Some transactions, so leave the transaction. So it becomes 2 lakh. 2 lakh by 1 lakh means what? 2 is 1. So reduced, right? So numerator alone reduces means ratio will decrease. Now I will increase this 1 lakh 50. 1 lakh 52 to, 1 lakh. 1 lakh to 1 lakh 25 I will increase. 1 lakh 25 means what? Again 2 times. Okay, again ratio has decreased. Now both I will increase by 50 50. Okay, 3 lakh divided by 1 lakh 50. So numerator became 3 lakh, denominator became 1 lakh 50. So 3 lakh divided by 1 lakh 50, again 2 is to 1, ratio reduced. Okay, so these are the possible cases where a ratio can reduce. Okay. So we have to check these possibilities. Purchased goods for cash. Purchasing goods for cash, cash will reduce. Similarly, stock will increase. Cash is also current asset, and cash is also current asset, stock is also current asset. One current asset decreases, another current asset increases. So current asset does not change, current liability also does not change. So ratio also does not change. So this is not the reason. Then cash collected from debtors. Same, cash collected from debtor means cash, one current asset increase, debtor another current asset decrease. So net current asset does not change. So this is also not reason for mismatch. So current asset remains same, current liability also remains same, net. So ratio will remain same, 2.5 is to 1. Outstanding salaries paid. So outstanding salaries paid means what? Outstanding salary is a current liability. Current liability reduces, new denominator reduces, but what you paid? Cash only. So cash current asset, I said, yeah, current asset alone should decrease, or current liability alone should increase, or both should increase for a decrease in this ratio. So since here both reduces means it will increase the ratio. See, you can cross check, you have value everything. Okay, so you can cross check. This is no effect, this is no effect, this will increase the ratio. Okay, what we need is decrease the ratio. Repayment of long term loan. So long term loan means what? A non current liability reduces, which is not there in the current ratio. How did you repay? Cash. Cash is a current asset. So 8 lakh current asset will reduce. So current asset alone reduce. Current asset alone reduce means obviously the ratio will decrease. So answer is D. Okay. I hope I made it clear. If you want some more clarification, you just let me know in comments. Okay. There are two statements. Statement 1, balance in the statement of P&L in the balance sheet of Samta Limited showed a deficit of 2 lakh. That means deficit means the debit balance, negative value, and the surplus of 3 lakh in the 22. So 1 year it is negative value, 2 lakh negative value, another year it is positive value. 5 lakh will be considered as the profit earned during the year for the preparing cash flow statement. Correct, because last year it was 3 lakh loss, this year it became 3 lakh, sorry, last year it was 2 lakh loss, this year it was 3 lakh profit. So that means this 2 lakh negative value became 3 lakh positive value. So for that the firm must have earned not 3 lakh. If it is 3 lakh means minus 2 lakh plus 3 lakh, 1 lakh only it will come. So that means 5 lakh the firm should have earned. So in that 2 lakh was written off, balance 3 lakh is there in the balance sheet. Okay. So this statement is correct. Second statement, on 31st March 2023, the goodwill account of Zeta Limited showed a balance of 4 lakh, and on the next year it showed 5 lakh. 1 lakh will be considered as goodwill acquired during the year for the preparation of, yes, this is goodwill purchased. When goodwill increases, then the goodwill has been purchased while purchasing some other business. Okay. So they did not ask whether it will come in cash flow or not. For that we need to know some other information, whether it is purchased by giving cash. If we giving cash means it will be considered as a purchase of goodwill in the investing activity. Suppose if the goodwill has been purchased by giving some non-cash, that is issue of shares or debentures means, then it won't come in cash flow. Okay, that and all is an additional information that we need, which is not there. So we have to assume it as a cash paid while purchasing. So it is goodwill purchased. So this statement is also correct. So both the statements are true. Okay. Then question number 29. The statement that shows changes in all the items of financial statements in absolute and percentage of terms over a period of time for a firm or between two firms is called comparative statement. So in comparative only we show absolute amount and percentage term. In common size we show only percentage of with comparing with the total or revenue from operation. But comparative only we show absolute amount of change as well as percentage of that increase or decrease. Dash ratios indicate the speed at which activities of the business are performed. Activity ratio. So that shows how well your performance. It's also called as performance ratio. Activity ratio, performance ratio, turnover ratio. Okay, so liquidity ratio to find out our short-term solvency. Solvency is find out long-term solvency. Profitability is to know how profitable we are. Okay, gross profit, net profit, all those profits ratio. Activity only we find out the performance, how we are performing. So this is what the answer D. Then 30th one, which of the following transaction will result in outflow of cash? Cash payments to and on behalf of employees. Which of the following transactions will result in outflow? So this is outflow only. Cash receipt is not an outflow. Issue of share is this is inflow. This is inflow. Dividend received, this is inflow. Then this is the only outflow we have. Okay. So this is not, this is not, this is not. In case of non-financial enterprise, payment of dividend is considered as what dividend we do not know. So there are two type of dividend these people pay. One is, let's take SBI. SBI is a public limited company which has shareholders. To SBI shareholder, SBI will pay dividend, which is financing activity. SBI also has mutual fund. Okay, in that some people invest. So these investors also they will share their dividend, which is operating activity. But here what they mean is their shareholder only. Okay, because I have seen this question many times in the book. They refer this payment of dividend only to their shareholders. So it is always financing activity. Okay. Show the following items under major heads and subheads. Just they are asking major head and subhead. Prepaid insurance is current liability sorry, current asset, other current asset. Then capital work in progress is non-current asset in that property, plant, equipment and intangible asset in that capital work in progress itself. One main interior subhead is there. Subhead is property, plant, equipment. In that property, plant, equipment, there are 4 internal subhead called the property, plant, equipment, intangible asset. Second is internal subhead. Third one, capital work in progress. Fourth one, intangible asset under development. So that is what I wrote it in the bracket. Okay, this is the head, this is the subhead, this is internal subhead. Okay, this subhead alone has 4 internal subhead. Unpaid dividend is current liability, other current liability. Okay, that's it. 3 questions, 3 marks. Oh, nice. Okay. Next, prepare a common size statement of profit and loss of Lavina Limited for the year ended 31st March 2023, 31st March 2024 from the following information. We have revenue from operation. Okay, let's do this. Common size. I don't think it is something difficult. Okay, still I will do it because there may be some people who may not know this also. Let's not judge, be judgmental. That everybody knows this like that. Okay, so it is there asking common size only, right? Prepare a common size statement of P&L. Yeah. Question number 32. Okay. 31st March 2023, 2020. Okay, it's common size only, no? You can write anything. First, okay, 2022, 23, 2023, 24. Particulars. It's not writing. எழுத மாட்டேங்குது. மொத்தமாக எழுதுது. Okay. So first we have to write revenue from operations, which is 80 lakh. But oh, sorry, I forgot to write percentage column. Percentage of 2022, 2023, percentage of 2022, 2023, 2024, then values of 2022, 2023, then values of 2023, 2024. Yeah. Okay, revenue from operation, it was, let me first write the values. 80 lakh, 40 lakh. Okay, then we will find out the percentage of both. Then we need other income. Do we have other income now? No other income. So this is the total income, so we can simply close this total income. Then we go to expenses. So I think under expenses, what we have is purchase of stock in trade and other expenses. 8 lakh, 4 lakh, 80,000, 40,000. So the first one, purchase of stock in trade. Okay, 8 lakh, 4 lakh. Then other expenses, which is 80,000, 40,000. Okay, 80,000, 40,000. Yeah, then we have to find out total expenses. This, sorry, we have to convert this income statement. The crucial part is, see, income statement will be given like this, some information alone. We have to convert that into format of statement of P&L. So total revenue first you have to write, then total expenses first you have to write. So total expenses 8 lakh 80,000, total this here 4 lakh 40,000. Okay, then we have to calculate profit before tax. So for that we have to subtract total revenue minus total expenses. 80 lakh minus 8 lakh 80, which means 71 lakh 20,000. Okay, 72 lakh, yeah, correct. 40 lakh minus 4 lakh 40, which is 35 lakh 60,000. Okay, then we have to calculate tax. It was said tax is 50% for both the year. So 50% means half. 71 lakh 20,000 half. That means 3 balance 1, 5 balance 1, 6. 35 lakh 60,000. Here 35 lakh 60. Okay, exactly half of the half. 1 balance 1, 7, 14 balance 1, 8. 17 lakh 80,000. So at last what we have is profit after tax. So remaining 50, which is also 35 lakh 60, 17 lakh 80. So let us calculate percentage. Common size means each and every value has to be compared with the revenue. Revenue is what, the base, which is the 100%. Okay, let's first calculate to this year. So now how we have to calculate each value divided by revenue from operation into 100. That is how you have to calculate percentage for common size. For balance sheet, total is the base. Okay, total of that year is what, base. Both liability asset same total only. So total is what, the base. So you have to write 100 for total. Each value divided by total into 100. That is each value divided by base value into 100. For common income statement, RO, this is the base. So 8 lakh divided by 80 lakh into 100. So 100 la irukka 2 0 and the 2 0 poidum. So in the 3 0 in the 3 0 poidum. So which means 80 lakh, 80 lakh, 8 lakh, 10% I thought. Sorry, okay. 100 la irukka 2 0 and the 80 lakh la irukka 2 0 strike out aidum. Balance 80 lakh la 1 2 3 4 inge 1 2 3 4 8 lakh la poidum. So which means 80,000 divided by 8, 10% varum. Okay, no need to write that symbol. So you can directly see since 8 lakh is 10% of 80 lakh. So that means 80,000 is 1% of 80 lakh. That means 88 lakh should be 11% of that 8 lakh 80 is, sorry, 8 lakh 80 is 11% of 80 lakh. Okay, so which means 71 lakh 20 is this 100 minus 11, 89% of only common size only this is possible. Now it is not possible for comparative. In comparative we should not do like this. Okay, so in that half, right, we can cross check this one. So 10% if we subtract means it will become 80 lakh minus 8 lakh, 72 lakh. 1% means 80,000. 72 lakh minus 80,000, 71 lakh 20,000. See, 89%. So in that half, 89% la half, 4.5%. That means this is also 4.5%. Then this 4 lakh is 10% of this 40 lakh. This 40,000 is 1% of this 40 lakh, and this 4 lakh 40,000 is then obviously 11%. So obviously it comes in the same manner. So 100 minus 11%, 89%. In that half, 44.5, and then this is also 44.5%. I hope this is clear. Let's move on to ratios. From the following information, the following information has been obtained from the books of the Vivek Limited. 10% debentures 15 lakh, current liabilities 2 lakh, non-current assets 25 lakh, current assets 7 lakh. During the year ended 31st March 2024, the net profit after interest and tax amounted to 4 lakh 10, tax paid 40,000. Calculate return on investment. Okay, to calculate return on investment, what was the formula? Profit before interest and tax divided by capital employed into 100. I will do it roughly. Okay, so you just write this same formally. So what we have here is profit after interest and tax, 4 lakh 10. Tax is given. So if we add tax now, we will get profit before tax after interest. If we also add interest now, we will get profit before interest and tax. So PBIT is equal to 4 lakh 10 plus tax that was subtracted. We are reversing and finding out profit before interest and tax, because what we have is profit after interest and tax. So tax we reversed, plus interest, here we have only one interest, we have 10% on this 15 lakh, which is 1 lakh 50. You have to write as formula. Okay, so you should write like profit before interest and tax is equal to profit after tax plus interest. So which is 4 lakh 50 plus 1 lakh 50, 6 lakh. So we got the numerator. So now denominator, capital employed formula is shareholders fund plus non-current liability. Do we have shareholders fund? No. Do we have non-current liability? No. So then how to calculate? Okay, non-current liability we have which is, this is what the non-current liability, but we don't have shareholders fund. How can we calculate now? With the given information we can easily calculate. See, just take balance sheet head alone. In balance sheet what we have? Shareholders fund, then non-current liability, current liability. Okay, then this side what we have? Non-current asset, current asset. So what we have here? Non-current asset we have, current asset we have, non-current liability. This is what? Non-current liability and current liability. Okay, so this is both together is what? Capital employed. So that means by adding this we will get total assets. From the total asset, if we subtract this, we will get this value. So non-current asset plus current asset together is 32 lakh is the total assets. Subtract non-current liability and current liability, these two. Okay, so shareholders fund oda formula வந்து இதுதான், total assets minus total debt. This is both together is what? Total debt. Non-current liability plus current liability is what? Total debt. So total debt is 15 lakh plus 2 lakh, 17 lakh. So shareholders, okay, we no need to do like this. Okay, I did it anyhow. 32 lakh minus 17 lakh, 15 lakh. Actually I no need to go this much lengthy. See, what we need? This 2, right? This 2 is what? Capital employed. If we subtract this one alone from total asset, we will get this one. So total asset is 32 lakh minus current liability. Okay, this is what we got here is shareholders fund, 15 lakh. 15 lakh plus non-current liability is what? Capital employed. Shareholders fund plus non-current liability. So 15 lakh plus 15 lakh, 30 lakh. So instead you can calculate like this, total asset. So that means capital employed is equal to total assets minus current liability. So 32 lakh minus this 2 lakh, so 30 lakh. Okay, now what is return on investment? ROI is equal to profit before interest and tax, which is 6 lakh, divided by capital employed, which is 30 lakh, into 100. 2 zeros will get cancelled, balance 1 2 3 4, 1 2 3 4. So 60 divided by 3, 20% is the answer. Hope that is clear. Let's move on to the next one. Revenue from operation, cash and credit, purchase cash and credit, carriage inward, salary, increase in inventory. So increase in inventory means closing inventory is more than the opening inventory. Opening inventory is lesser than the closing inventory. So that is why in the beginning it was something, but closing inventory is 50,000 more than the opening inventory. It has increased. Wages. Okay, calculate operating ratio. What else we have? That's it. So what is the formula to calculate operating ratio? Operating cost divided by revenue from operations into 100. Operating cost means what? Cost of revenue from operations plus any other operating expenses, anything indirect expenses. Okay, okay, I will write this formula. I'll write. Okay, this is 33. Yeah, I'll write it here. I think this one is annoying, this notepad. I'll take another notepad which I have. I will go from here. I think this one won't be a problem. Yeah, see, operating operating ratio is equal to operating cost divided by revenue from operations into 100. Operating cost is equal to cost of revenue from operation, also called as cost of goods sold, plus any other operating expenses. Now how to calculate cost of revenue from operation? So there are two different formula, direct and indirect. To calculate direct, we need purchase, opening inventory, closing inventory, direct expense, which we have here: purchase, opening inventory, closing inventory, direct expenses. So everything we have. So with this we can calculate CRO. So CRO is opening inventory. Okay, I'll write OI. Okay, let's make it little bit easy. Opening inventory plus net purchases plus all direct expenses minus closing inventory. Okay, so but we don't have opening inventory, closing inventory separate value. We just have increase in inventory only. So what I can rechange this. I will write it here, which means net purchases plus direct expenses plus opening inventory minus closing inventory. Now this I can combine. Okay, this is what this increase in inventory means. What? Opening inventory minus opening inventory minus closing inventory. If opening inventory is more na, this is called decrease in inventory. So decrease in inventory is a positive value, because decrease means what? Opening inventory is more, closing it decreased. So based on closing only we decide whether it is increased or decreased. Well, comparing last year, current year is what? Closing stock. Current year stock decreased. So that means opening is more, closing is less. Opening is a positive value, closing is a negative value. So bigger value is positive. So decrease in inventory is a positive value, whereas increase in inventory is a negative value, because increase means what? Opening inventory is more than, closing inventory is more than opening inventory. So difference is 50,000, but the difference is closing inventory order difference, not opening inventory is excess. Closing inventory only excess. So closing inventory is a negative value in our formula. So we can say like this. Okay, rewrite this question now. Net purchases plus direct expense plus decrease in inventory or minus increase in inventory. So decrease in inventory means it is a positive value, because opening inventory is more. So decrease in inventory means opening inventory is more than closing inventory. So this is positive, this is negative. So positive more means positive value, answer. Increase in inventory means opening inventory is lesser than the closing inventory. So closing inventory has increased, closing is more, which is the negative value, this is the positive value. So negative value is more, so answer is negative. So what we have? Net purchases we have, direct expenses we have. Net purchases is both 12 lakh plus direct expenses we have. Carriage inward is one direct expense, wages is one direct expense, salary is an indirect expense, but that is also operating expense. For operating cost it will come, but now we are calculating CRO. For CRO it won't come. So 85 plus 25, 1,05,000 direct expenses. So this is increase in inventory, so minus 50,000. Okay, so CRO is equal to 1 lakh, the 12 lakh, 12 lakh 55 12 lakh plus 1 lakh 5 minus 50, that means plus 55. So 12 lakh plus 55,000 CRO. Now operating cost is equal to CRO 12 lakh 55,000 plus any other indirect expense. So we have one indirect expense, that is salary. So salary, take 1 lakh 45, 1 lakh 45. So that means operating cost is 14 lakh. So operating ratio means operating cost 14 lakh divided by revenue from operations, which is total cash and credit together only we want 25 lakh into 100. So 2 zeros, 2 zeros, balance 3 zeros, 3 zeros. So 5 adicha 5 2 8 0, again 5 adicha 5 6. That means operating ratio is 56% is the answer. That's it. Hope I made this one clear. Okay. Please, if you have any doubt, feel free to ask in the comments. Okay, let's move on to the important and last part, cash flow statement. Okay, I always recommend students in a different method. I don't do what based on the format what I need. Okay, so first we will open empty format with all the headings, then we will just apply. That saves a lot of time, because we don't need to worry whether this item is there in this one. Okay, so what we have to do is, so write cash flow statement number 1, operating activity. Okay, so what we have to write is, first we have to start with the surplus. Okay, so here you will write surplus and draw two amount columns. One is for outer amount, one is for inner column. So first we will write surplus, and then 1 2 3 4 lines. Maximum we will have general reserve, provision for tax, dividend, like that only we have. Okay, so then draw a single line in the outer, because everything we will write in the outer column only. So this value is what called as net profit before tax and extraordinary items. Then what we have to do is add non-cash and non-operating expenses or losses. This is an heading where I generally 4 to 5 lines I ask my students to leave. 1 2 3 4. Okay, draw a line here. You have to write everything in the inner column, then draw a line in the outer column. The total you have to write, then this total and this total you will add it and write here. No name for this total. Then immediately you subtract non-cash and non-operating incomes or gains. Okay, I just asked my students only to maintain 2 lines, because hardly we have gain on sale of something, fixed asset. You just check here, we have loss only. Now that means some income, no other is received. So I think that heading is not even needed. Okay, but sometimes like this we create some column that we may not use. No worries, just leave that one empty. So draw a line here, draw a line here, total you have to write here, this you have to write it in bracket, empty bracket, because this is a negative value. Okay, then this value and this value you subtract and write here, and the value for this, name for this is operating profit before working capital changes. Now what we have to do is we have to add decrease in current asset and increase in current liability. Here you leave 4 lines, draw a line, this total you have to add and write, no value for the total, then subtract increase in current asset and decrease in current liability. For cash flow I will make a separate video, don't worry if you don't know why we are adding this, why we are subtracting this, because this video is not for explanation of any particular topic, so I cannot do it here. For this I will put a separate video. Here also you leave 4 line, to draw line here, total outer column, put it in bracket because negative value. Now after subtracting these two, there here we will have one value, this is cash generated from operations before tax less tax paid. So this is tax we have to subtract, and this is the final amount. We write net cash space from are used in operating activity. Positive means we have to write from, negative means we have to write used in. So with this operating activity over. Next number 2, investing activity. Investing activity hardly will have 4 to 5, so 1 2 3 4 5 you leave it. What happened? So draw a line here, and this is net cash from or used in investing activity. And then third one, financing activity. Here we'll have 6 to 7 lines we have to leave, 1 2 3 4 5 6 7, because we'll have issue of shares, issue of debentures, redemption, and then interest, repayment of loan sometimes, so something like that, yeah, dividend. So 6 to 7 is what moderate. Then net, suppose if you are leaving 4 lines 5 lines, but that is items comes more than 4 5 lines, means adjust somewhere in between and you finish it, don't worry. Net cash from or used in financing activity. Then after adding all the activity, you'll get net increase or decrease in cash and cash equivalents, that is all the total of all the 3. In that add opening balance of cash and cash equivalents and current investment. So what answer we will get is, what happened? What answer we will get is closing balance of cash and cash equivalents and current investment. That's it. This is the empty format. So initially you may make time, consume time in writing the empty format, but once you write the empty format, it will be very easy to complete. So now you no need to worry what comes in this one, you no need to go and search this area. You just go to the question. Okay, just go to the question one by one First you see the additional information. This is for sale of machinery, this is for debenture. Okay, only for these two you need to be careful. Okay, so come shareholders, no additional information, no notes to accounts. So share capital increased from 25 lakh to 30. This is from here to here, you have to check previous year, current year. From 25 lakh it became 30 to 37 lakh, which means 12 lakh increased. So only if we issue share capital will increase. So that means probably we would have received money by issuing shares. So it is an inflow in the financing activity. So go to financing activity and write issue of shares. Okay, which is 12 lakh positive value. Then so this is over, tick. Reserves and surplus, we have a note. So go to note. What we have is only reserves and sorry, only profit and loss account balance. So from 12 lakh it became 5 lakh. Again from this to this you have to see. So which means it has reduced. So 7 lakh reduced. So 7 lakh loss. So go to first value, surplus is what the starting point, right? Surplus, but you write this 7 lakh as a bracket, negative value. Don't write loss, positive value. Okay. Okay. So this is over. This is over. Now next one, long-term borrowing, note number 2. Long-term borrowing, note number 2. First, you take this value from 18 to 20 lakh. Then you see what has happened to the interest. First we will go to these values, then we will go to interest. From 18 to 20 it has increased. Okay, and that means we have issued debentures. So date has been given. This date is only given to calculate interest. So first we will see this 2 lakh. 2 lakh issued. So financing activity inflow. So go to financing activity and write issue of 10% debenture inflow, positive value 2 lakh. So debenture over. Then 10% interest. Now interest, this value or this value. For this we need date. When we issued end of the current year, this date, this is the current year. That means 2 lakh were issued only today. We are preparing CFS cash flow statement this date only. So for the loan borrowed today, no interest today. So that means only this value. That means if this is closing date means previous year value, opening date means current year value. In between some date means you have to split up from this date to this date. This is the loan value. So for that many months, that value loan interest. From this date to this date, this is the loan value. So for this many months, interest on that particular value. So you have to split up. So now for us 18 lakh la 10%, 1 lakh 80 interest we paid. Financing activity, interest on 10% debenture, which is 1 lakh 80 negative value paid, payment, which is also comes here, non-cash and non-operating expense. It is a non-operating expense deducted from profit, so we have to remove it by adding it. Interest on debenture 1 lakh 80. That's it. Okay. The next one, so debentures over. So one by one you have to tick like this. Long-term borrowings over. Now current liability, short-term borrowing, no notes. So borrowing has increased means you further borrowed. So increase short-term borrowings raised 50,000. Financing activity, short-term borrowing, long-term borrowing, all are financing activity. Short-term borrowings raised means further loan we borrowed. So that means borrowing of a loan is an inflow of money, positive value 50,000. So over. Then trade payable. Trade payable is working capital changes. Current liability, increase mean add, decrease means less. It has increased 1 lakh 50. So which means add. here increase in current liability. Okay, so increase in trade payable 1,50,000 or trade payable over. Then property, plant, equipment. Plant we have, so plant we had an adjustment. Hope you remember there is a sale. Okay, we also have note stock or note number 3. So plant and machinery accumulated depreciation is there. So we have to prepare plant and machinery account and accumulated depreciation account. Plant and machinery 4 lakh costing, on which accumulated depreciation was 3 lakh. That means net value is 1 lakh, depreciated value is 1 lakh, was sold at a loss of 70. That means 30,000 we sold. 1 lakh cost of an asset, we sold it for 70,000 loss, which means 30,000 we received. So all these informations we have to write it, and we have to find out one information from this account. What is the depreciation for the remaining assets charged? So carefully check, see this account. I'll write the format first. Machinery account. So machinery account, I'll write the format first. Opening balance will come here to balance broaden because asset is debit balance. Closing balance will come credit side. Credit side, what are the transaction will come now? Sale will come, loss will come, accumulated depreciation charging to the asset will come. So 3 transaction will come on the credit side. So after 3-4 lines you write here by balance carried down. So this is opening balance, that means previous year value. This is closing balance, that means current year value. And debit side what we have is purchase we have, gain we have, but in this sum we know, sorry, we have to write here bank bracket purchase. So credit side we will have, we are charging the accumulated depreciation of the asset sold, we are selling the asset and we received something, bank sale, and loss also reduces the value of the sale, the asset. Okay, now that's it. Okay, now just put all the values and find out what is the opening balance of the asset. Here previous year value 44 lakh, current year 50 lakh. So 44 lakh, current year 50 lakh. Okay, then see, accumulated depreciation means an asset will not be depreciated every year. Instead, the depreciation will be accumulated and it will be deducted from the asset only when the asset is sold. See here 4 lakh cost of an asset is sold, on which 3 lakh has been accumulated. That means at the time of sale of an asset, the entire accumulated depreciation will be charged to the asset. That 3 lakh is what this 3 lakh accumulated depreciation. This 44 lakh, that 4 lakh includes, that 4 lakh we are subtracting that 3 lakh. Okay, then bank, I told you it is 30,000 received and 70,000 is the loss. If you add all these 3, 4 lakh should come, because journal entry is bank account accumulated depreciation account debit 3 lakh, bank account debit 30, loss on sale account debit 70, to machinery account 4 lakh. 4 lakh is credited. The 4 lakh value of a machinery, cost of the machinery in this 44 lakh goes out. So we have to credit 4 lakh. By this 3 account it is credited. Okay, so by this we can find out purchase. Yeah, purchase also we have to find out. So 50 lakh, that one is 4 lakh. It is 54 lakh, 54 lakh. So difference is 10 lakh. We also have one more account, and that is accumulated depreciation account. So in this account, opening balance will come on the credit side, because accumulated depreciation means provision. Provision is a liability. So balance brought down will come here, closing balance will come here, current year value. So in this accumulated depreciation only two transactions comes. Every year we accumulate the depreciation which will be added to the depreciation accumulated depreciation account. So by depreciation, so this is the depreciation that we, it's an expense account which we charge it to the surplus and we accumulate here. So this is credited to the accumulated depreciation account. Then whenever an asset goes out from the accumulated depreciation account, we will deduct and we will give it to machinery. So this is for the asset sold. Sold assets depreciation, accumulated depreciation, we will remove it from this account. So what is the opening balance? 3 lakh, closing balance 5 lakh. Opening balance 3 lakh, closing balance 5 lakh, and the accumulated depreciation charged to the asset, here we have 3 lakh, or you can also say this 3 lakh is what going to come now here as a 3 lakh. So which means, see, beginning we had 3 lakh, the entire 3 lakh is what, that 4 lakh value of an asset. That's it. Okay, with that information, that is what. So which means this side total 8 lakh. So this side total is 3 lakh only. So 8 lakh minus 3 lakh is what the depreciation accumulated during the current year, 5 lakh. So this is the balancing figure here, and this is the balancing figure in this account. Okay, let's come from the machinery account. Balance will not come anywhere, and similarly this accumulated depreciation also will not come anywhere. This is account to account transfer, accumulated depreciation to machinery. So there is no inflow outflow involved. So let's come from one by one. So this purchase of machinery is outflow in the investing activity, 10 lakh. Investing activity, just go on right. Purchase of machinery, 10 lakh outflow. Purchase means outflow. Then this is written. Then sale, 30,000 inflow. Sale of machinery, 30,000 inflow. Don't write loss in the investing activity. Investing activity, inflow outflow will come. So that sale is after loss, after gain only. But this loss will come here, non-cash and non-operating loss. It is a non-operating loss which is deducted from profit. So we have to remove it by reversing it, by adding it. Loss on sale of machinery, 70,000. Okay, yeah. Okay. So this account is over. So as I said, opening balance, closing balance will not come. This machinery transfer is a transfer entry, so it won't come. So only that comes is this depreciation. This is the expense that was charged to the asset. Sorry, profit, not asset. Okay, it's a non-cash expense. It's an operating expense only, depreciation, but it is a non-cash expense. So a non-cash expense is in cash flow statement. Cash flow statement, we want only cash activity. Non-cash activity we have to remove. It is already deducted from surplus. To remove it, we have to add it and we have to remove. So depreciation, it came 5 lakh, right? Okay, that's it. Depreciation we have written. So that means everything has been ticked. So machinery account over, accumulated depreciation account over. So which means this is over, this is over. So property, plant, equipment over. Then we have intangible asset. Note number 4, goodwill. Goodwill reduced from 5 lakh to 3 lakh. That means goodwill is amortized, written off, which is a non-cash expense. Amortization of goodwill. Goodwill amortized, or you can also write written off 2 lakh. Deducted from profit, one non-cash activity, so we have to add and remove. So intangible assets over. Current assets. So this current investment and cash equivalents is what? Final answer I told you. So this opening balance 6 lakh is what? Here. Add opening balance of cash and cash equivalents. Final answer should be closing balance of cash and cash equivalents, which is 7 lakh. So which means it is very obvious that net increase and decrease should be 1 lakh. Final answer should be 1 lakh. Well, let's check. Okay. So inventories, current asset, working capital changes, decrease, add, increase, less. So it is decreased. So add 2 lakh here. Working capital changes here. Decrease in inventory 2 lakh. Then trade receivable, it has increased. So 8 lakh increased. So which means less 8 lakh. Increase in trade receivable 8 lakh. That's it. Everything has been ticked. See, all the informations have been ticked. Okay. So which means we have completed this cash flow statement. Now just go and sum it up. So this is 7 lakh negative, and this one is 7 lakh, 8 lakh 80, 9 lakh 50, add. This is add 9 lakh 50. 9 lakh 50 minus 7 lakh, 2 lakh 50 positive value. There is no non-cash and non-operating income. Just put dash and write the total as it is below, 2 lakh 50. And again this is add 3 lakh 50. 2 lakh 50 plus 3 lakh 50, 6 lakh. Subtract 8 lakh. That means 2 lakh. There is nothing to be deducted as tax. So 2 lakh negative value. That is net cash used in operating activity 2 lakh. So purchase of machinery minus 10 lakh. Okay, investing activity minus 10 lakh plus 30,000. So minus 9 lakh 70,000. So again this also used. You see here it is this all positive value. Add 12 lakh, 14 lakh, 14 lakh 50. Okay, this two if we add now 20,000 positive. So that means 12 lakh 70. So there are two negative values. 2 lakh plus 9 lakh. So if we add this 11 lakh 70 negative value, 12 lakh 70 positive value. So net value is 1 lakh positive value after adding this all the activity 1 plus 2 plus 3. So net, you see 1 lakh plus 6 lakh 7 lakh answer came. So that means cash flow statement is correct. I hope you have understood the entire cash flow statement. That's it. So I always teach my students by this method only, that is open empty format and just fill up everything, so that you don't need to search here and there, this is there or not, like that. Okay, so with this this particular question paper discussion is over. Suppose if you are having set 1 set 2, don't worry, just question would have been jumbled. Make sure which question number is yours. Okay, accordingly you can check this answer. Okay, name also would not even change the name of the partner company, it will be similar values. Okay, I hope the session was clear. Suppose if I made any mistake, okay, I also do mistakes. You feel that what I said is not correct, please tell me that, so that I can also correct it in my future. Okay, if you have any other doubt, or if you want me to teach any particular topic, please let me know that in the comment section, so that I can make a video for that. Okay, எல்லாருக்கும் புரிஞ்சிருக்கும்னு நினைக்கிறேன். Okay guys, it has been more than I think 5 hours. Okay, 3 hours எழுத வேண்டிய பேப்பர் 5 hours எழுதிக்கிட்டீங்களே சார் நீங்கள் ஏன்னு சொல்லுவேன். நான் இவ்வளோ எக்ஸ்பிளைன் பண்ணி சொல்லிகிட்டு இருக்கிறேன். அந்தளவுக்கு எக்ஸாம்லலாம் நம்ம பண்ண மாட்டோம்ல. Okay, so it's not according to me it's a moderate paper. It's not a difficult one. It's not I won't even say it is an easy one, because there are some MCQs which are very tricky. Okay, based on what we because generally நம்ம ரவுண்ட் ஃபிகர்ஸாக தான் ஃபேஸ் வேல்யூ ப்ராக்டிஸ் பண்ணுவோம். இங்கே ஃபேஸ் வேல்யூ பார்த்தா இப்படி தான் வந்தது 75, 80. So we tend to make some mistakes in that. That's why I said it's not easy, as well as it's not a difficult one. You focus on that particular small trifle. Okay guys, ஏதாச்சும் டவுட் இருந்தால் சொல்லுங்கள். Any suggestions or any complaints, feel free to tell me in comments. Okay, bye bye, see you guys in next video.